markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. America's labor market pressing on. May's report, it shows employees added 272,000 jobs, topping forecasts. That's pushing Wall Street to push back on the timing of Federal Reserve rate cuts. At the same time, unemployment rose to 4%. That's a 2-year high, and that's a sign it's taken the jobless longer to find work. We'll head to the NASDAQ now. Little change, up about 3 points at 17,179. We have the Dow up 0.4% at 165 points at 39,051. And then finally, the S&P 500 up 0.2%, 11 points at 5,364. We head over to the bond market. We have the 2-year yield at 4.85%. That's up 13 basis points. The 10-year yield, 4.42%, and that's up 13 basis points. We'll take a look at commodities. We have spot gold. That's lower at $2,319 an ounce. Brent crude, $79 a barrel. We have WTI crude at $75 a barrel. Shares of Lyft, well, they're seeing a lift of their own, are up almost 2% right now. The company kicked off its first investor day yesterday, said it's expecting a 15% growth in bookings over the next 3 years. That is your Bloomberg Business Flash. Paul and Alex.
All right, thank you so much, Lisa Mateo. We are expecting President Biden on a speech on democracy and freedom during a visit to Normandy. We will bring that to you when it starts. We also want to check in with the market reaction, right? Stocks up, yields up. That's confusing, particularly on a hot jobs number. So who are we going to go to? Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Ira, does the move make sense to you?
Well, the Treasury move certainly does. You know, when you get a hot job market like we have, and certainly a upside surprise in those payroll data, you know, we've priced out basically an entire cut for the rest of the cycle. And, you know, I think that that's just endemic of the idea that we're going to have a not a huge deterioration in the economic environment near term. And maybe that's what's going on in the risk asset markets too. But, you know, I'd let Gina Martin Adams, my colleague for equities, you know, opine on that. But it seems like, you know, maybe good news is kind of good news. And, you know, it's not unusual in a normal environment for the stock market to go up and bond market prices to go down and while yields are going up. So, you know, maybe this is just a return to normalcy in terms of the relationship between stocks and bonds.
What's the bond market, Ira, telling us today about the Fed and rate cuts? Are there some folks that are saying maybe nothing this year?
Yeah, and actually, we're not even fully priced for any cuts this year at this point. You know, I still think it's possible that the Fed will do a cut, maybe 2 by the end of the year. But you'd have to see a very significant deterioration in the economic data. And, you know, Paul, you and I were talking earlier this morning. It's those wage numbers that are really important to me because, you know, the job market's so important. And yes, we want people to be employed. But with wages growing over 4% a year, year on year, that's money in people's pockets that they can then use to spend money.
Hey,
and
Ira,
that's
we're
where
going
growth
to have
is
to
good.
leave it there. We have the president speaking. So that's Ira Jersey, Chief U.S. Interest Rate Strategist, chiming in on the numbers. Let's go to Normandy in France. President Biden speaking.
6th of June, 1944. The wind was pounding as it is today. It always has against these cliffs. 225 American Rangers arrived by ship, jumped into the waves and stormed the beach. They could see, all they could see was the outline of the shore and the enormity of these cliffs. And I'd like to look, I know I'll get in trouble with the Secret Service if I go to the edge and look over, but think of those cliffs as my host just showed me. That's what we're standing on top of. They could hear, all they could hear was the crack of bullets hitting ships, sand, rocks, hitting everything. All they knew was time was of the essence. They had only 30 minutes to eliminate the Nazi guns high on this cliff. Guns that could halt the Allied invasion before it even began. But these were American Rangers. They were ready. They ran toward the cliffs and mines planted on the beach by Field Marshal Rommel exploded around them, but still they kept coming. Gunfire rained above them, but still they kept coming. Nazi grenades thrown from above exploded against the cliffs, but still they kept coming. Within minutes, they reached the base of this cliff. They launched their ladders, their ropes, and grappling hooks, and they began to climb. When the Nazis cut their ladders, the Rangers used their ropes. When the Nazis cut their ropes, the Rangers used their hands. And inch by inch, foot by foot, yard by yard, the Rangers literally clawed their way up this mighty precipice until at last they reached the top. They breached Hitler's Atlantic Wall, and they turned in that one effort the tide of the war that began to save the world. Ladies and gentlemen, yesterday I paid my respects at the American Cemetery just a few miles from here, where many of those Rangers who died taking this cliff are buried. I spoke of what the fallen had done to defend freedom. Today, as I look out at this battlefield and all the bunkers and bomb craters that are still surrounded, one thought comes to mind. My God, how did they do it? How were these Americans willing to risk everything, dare everything, and give everything? There were Americans like Sergeant Leonard Lommel from New Jersey. He was one of the first Rangers to jump off his ship and run toward the cliff. He almost was shot right above the hip initially, and wasn't sure, but he was. He kept going. At one point, he was scaling the cliff. Another Ranger yelled, "I'm not sure I can make it." And Lommel yelled back with every ounce of strength he had in him, "You've got to hold on." And he did, and they did. Americans like Sergeant Tom Ruggiero from Massachusetts. A German shell hit his boat as he was approaching the shore. Everything exploded. The sergeant was knocked into the freezing water. And as he told it, he began to utter a prayer. "Dear God, don't let me drown. I want to get in and do what I'm here and supposed to do." Americans like Colonel James Rudder, Texas. When the military asked for a battalion for this daring mission, he raised his hand and said, "My Rangers can do the job." He knew their capacity. He knew the strength of their character. A few days after they scaled this cliff, he wrote a condolence letter to a mother of one of the Rangers who gave his life here. And that letter said, "A country must be great to call for the sacrifice of such men. A country must be great to call for the sacrifice of such men." And Americans like John Wardell from New Jersey. John is here. John, we love you, man. Thank you for all you've done. Deserve that and a lot more, John. Just 18 years old, he deployed to this cliff to replace the surviving Rangers on that D-Day invasion. He would go on to fight across France and Germany. In early December 1944, during one of those battles, shrapnel pierced his skull. But by Christmas, he was back, fighting with his unit. And here's what he said about what the notes he kept at that time. He said, "Knowing that my buddies and I always looked out for one another. That's why he came back. That's why he fought so hard to get back. He always looked out, and his buddies looked out for one another." We talk about democracy, American democracy. We often talk about the ideals of life, liberty, pursuit of happiness. What we don't talk about is how hard it is. How many ways we're asked to walk away, how many instincts are to walk away. The most natural instinct is to walk away, to be selfish, to force our will upon others, to seize power, never give up. American democracy asks the hardest of things, to believe that we're part of something bigger than ourselves. So democracy begins with each of us. It begins when one person decides there's something more important than themselves. When they decide the person they're serving alongside of is someone to look after. When they decide the mission matters more than their life. When they decide that their country matters more than they do. That's what the Rangers at Pointe du Hoc did. That's what they decided. That's what every soldier, every Marine who stormed this beaches decided. A feared dictator had conquered a continent, had finally met his match. Because of them, the war turned. They stood against Hitler's aggression. Does anyone doubt that they would want America to stand up against Putin's aggression here in Europe today? They stormed the beaches alongside their allies. Does anyone believe these Rangers would want America to go it alone today? They fought to vanquish a hateful ideology in the 30s and 40s. Does anyone doubt they wouldn't move heaven and earth to vanquish hateful ideologies of today? These Rangers put mission and country above themselves. Does anyone believe they would exact any less from every American today? These Rangers remembered with reverence those who gave their lives in battle. Could they or anyone ever imagine that America would do the same, wouldn't do the same? They believed America was a beacon to the world. I'm certain they believed that it would be that way forever. You know, we stand today, where we stand was not sacred ground on June the 5th. But that's what it became on June the 6th. The Rangers who scaled this cliff didn't know they would change the world, but they did. I've long said that history has shown that ordinary Americans can do extraordinary things when challenged. There's no better example of that in the entire world than right here at Pointe du Hoc. Rangers from farms and cities in every part of America, from homes that didn't know wealth and power. They came to a shoreline that none of them would have picked out on a map. They came to a country many of them had never seen, for a people they had never met. But they came. They did their job. They fulfilled their mission. And they did their duty. They were part of something greater than themselves. They were Americans. I stand here today as the first president to come to Pointe du Hoc when none of those 225 brave men who scaled this cliff on D-Day are still alive. None. But I'm here to tell you that with them gone, the wind we hear coming off this ocean will not fade. It will grow louder as we gather here today. It's not just to honor those who showed such remarkable bravery on that day, June 6, 1944. It's to listen to the echoes of their voices, to hear them, because they are summoning us, and they're summoning us now. They ask us, what will we do? They're not asking us to scale these cliffs, but they're asking us to stay true to what America stands for. They're not asking us to give or risk our lives, but they are asking us to care for others in our country more than ourselves. They're not asking us to do their job. They're asking us to do our job, to protect freedom in our time, to defend democracy, to stand up aggression abroad and at home, to be part of something bigger than ourselves. My fellow Americans, I refuse to believe, I simply refuse to believe that America's greatness is a thing of the past. I still believe there's nothing beyond our capacity in America when we act together. We're the fortunate heirs of the legacy of these heroes, those who scaled the cliffs, Pointe du Hoc. We must also be the keepers of their mission, the keepers of their mission, the bearers of the flame of freedom that they kept burning bright. That is the truest testimonial to their lives. Our actions every day to ensure that our democracy endures and the soul of our nation endures. To come here simply to remember the ghosts of Pointe du Hoc isn't enough. We need to hear them. We have to listen to them. We need to listen to what they had. We need to make a solemn vow to never let them down. God bless the fallen. God bless the brave men who scaled these cliffs. May God protect our troops. God bless America.
That was President Biden speaking in the beach of Normandy against an amazing backdrop of the English Channel there, and with an inspired speech about the bravery of the folks at D-Day, calling out the Rangers who scaled those cliffs, and kind of really compelling commentary about kind of the bravery that those folks exhibited back then. But obviously a great time for the president in terms of visibility and so on. We want to bring in Jody Schneider, political news director for Bloomberg Television and Radio. And Jody, it seemed like a pretty straightforward speech by the president. What are your takeaways?
Yeah, it was. It was a good speech. It was very presidential on the world stage, given to the world. It wasn't just a very domestic-oriented speech, as he makes sometimes, saying things like democracy asks the hardest of things, talking about how the troops that day, what they would have wanted. And one of his, I think, takeaway quotes was that they would have wanted to stand up, they would have wanted Americans now to stand up to aggression at home and abroad. And while not mentioning his opponent, while not being a campaign speech per se, this is one of the perks of incumbency, if you will, when you are running for re-election, that you get to make speeches like this that are broadcast around the world and that are also that hit on big themes. I think he was also making, a point, without, of course, mentioning his opponent, Donald Trump, by name, of saying we will stand with other countries, democracy at home and abroad, and something I think that the president will be talking a lot about at the G7, which he will attend next week in Italy, and also at NATO, which will be in D.C. in July, about how he wants to stand with other countries and strengthen these institutions.
Well, that's what I was thinking about when he was giving a very strong, heartfelt speech, it seemed, that the parallels and the risks of any isolationism and the parallels of Russia and Ukraine. And this echoes Senator Mitch McConnell, who wrote a piece, I can't remember if it was the Journal or was the FT, I'm guessing the Journal, about just that, and talking to the isolationists that may exist in the Republican or Democrat Party in Congress, saying, we can't do that. We can't do that again. We waited too long to get into World War II. We need to make sure that we don't make those kind of same mistakes. Can you talk us through how Congress is thinking about these things right now?
Yeah, and the President Biden met with President Zelensky of Ukraine this morning as well, or early this morning, and that is certainly part of his theme, that we will support Ukraine, we will do what's needed. Now, of course, to do that, he needs to get things through the U.S. Congress, and right now the U.S. Congress is not necessarily in the mood to A, give him much, give the Democrats much, but B, to spend a lot on these kinds of conflicts without a lot of debate and discussion. It took 6 months to get a funding bill through for Ukraine, even though there was a lot of support for it on both sides of the aisle. But in such a divided Congress and such a divisive atmosphere, doing things that would appear to help the other party and their notions of what should be done is very difficult.
All right, Jody, thank you so much. We really appreciate it. Jody Schneider, political news director for Bloomberg Television and Radio, joining us here in our Bloomberg Interactive Brokers studio. So on this jobs day, we've kind of got the markets turning around a little bit. The futures, for the equity futures, were off, pretty markedly, and then we did open weak. But stocks has turned around a little bit. We got the S&P up about 0.1%, the Dow up about 0.3%, NASDAQ just off about 8 points here. But I think the story really here is, Alex, is in the bond market. You take a look at the 2-year Treasury. It's up 13 basis points to 4.855%. Bond market's telling you that the Fed's not really going to be in a rush here. And
I would say also the FX market. So you're looking at a super strong dollar, and we just got a headline that the Mexican peso weakens 2% on the day, leading global losses. Now, clearly, the peso is under pressure for different reasons due to the election, the supermajority in Congress, but nonetheless, that stronger dollar, it's really like chill with stocks, buy dollars, sell bonds, seems to be the takeaway of the day. We're going to be talking about all of this within the next hour as well, so stay with us. This is Bloomberg Intelligence on Bloomberg Radio.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, folks, coming up in this hour, we're going to check in with Vince Signorella. He's a Bloomberg macro strategist, get his thoughts on how these markets are reacting to the jobs data today. Scott Carpenter, he's a Bloomberg bond market reporter. They got the big cake story today entitled Wall Street CLO Machine Wipes Out Apartment Investors. We'll get the latest there. And it's Friday, which means we talk municipal bonds with the one, the only, Joe Mysak. The soon-to-be retiring Joe Mysak, I might add. He's the editor of the Bloomberg Brief. He is the godfather of the municipal bond market here, so we'll get him. I'm guessing in studio because he doesn't mail it in too often. But first, let's go to Charlie Pellet. Get a Bloomberg Business Brief.
Thank you very much, Paul Sweeney. Here's what's going on. Little change, but higher right now on the S&P 500 index, up 2 points to 53.55, a gain of less than 0.1%. Dow Industrials advancing 66. Jobs Friday up 0.2%. A retreat for NASDAQ, though, down 20 points now, a decline there of 0.1%. 10-year, 4.41%, with a 2-year, 4.85%. Gold is down $2.50 the ounce to $23.13, while West Texas Intermediate crude oil is now higher by 0.3%, $75.75 a barrel on WTI. Stocks climbed after a solid jobs report helped quell fears about an economic slowdown that could hurt corporate America, even if that means a potential delay in Federal Reserve rate cuts. Administration reaction to this morning's jobs report from acting U.S. Labor Secretary Julie Su.
Well, this is another very strong jobs report. I'm not going to get tired of coming here and telling you that we are continuing to experience very strong, stable, and steady growth. So it's 272,000 jobs created last month. The unemployment rate has remained at or below 4% for 30 months straight. That's still the longest since the 1960s.
Acting U.S. Labor Secretary Julie Su speaking this morning with our Joe Matthew. GameStop shares plunging after the video game retailer unexpectedly released earnings and a plan to sell up to 75 million additional shares hours before Keith Gill's highly anticipated return to YouTube drew in spectators. GameStop shares down now by 27.6%. And among some of the other meme names, AMC Entertainment down 6.4%. Recapping, stocks are mixed. S&P up 3, up by 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio, where we bring you all the top news in business and finance and economics through our lens of our Bloomberg Intelligence analysts. They cover 2,000 companies and 130 industries worldwide. We also talk to all the cool guys on Wall Street and gals and figure out what's going on. Looking at GameStop, as Charlie was just talking about, now down 27%. I really am interested what Roaring Kitty is going to wind up saying at noon. And it's sort of like people on Wall Street hate that they have to care about this, but they do, because if it moves stocks, Steve Sosnick over at Interactive Brokers was saying something along those lines in a print article. Be like, yeah, I guess I got to figure out why we care.
I know. Well, I mean, looking at this, I mean, again, the stock's down 28% here today, but what gets me is the value, the volume of shares that trade here. We're at 122 million shares trading, at 33. I mean, you think about the dollars that are being bought and sold, and we talked to Bailey Lipschultz, who covers the equity markets for Bloomberg News, and his reporting and his sources are saying it's a lot of these quant hedge funds that are just kind of algo-related hedge funds where they see volume, they go there and they start whipping around and try to bid ask and try to make some spreads on the volume here, and they are on the other side. A lot of these trades here providing some liquidity for, I guess, some of the meme stock folks who want to trade these names.
I have to wonder too, so if he goes on and does something, I mean, first of all, where is the SEC going to be in all of this action? Like, I'm not saying that there's anything sketchy going on, but the SEC is going to be looking at all the things. If he says stuff that does things to the stock, is YouTube responsible for it? How does that shake out? Because there are different theories on that, right? And I think how this evolves will be actually quite interesting.
All right. All right, so it's interesting. So we'll see. But looking at the markets here, just broadly defined, kind of the S&P's unchanged, and that Dow's up about 1/10 of 1%, and Nasdaq's off about 1/10 of 1%. Let's dig under the hood a little bit. We'll do that with Vince Signorello, market strategist for Bloomberg News. Hey, Vince, what do you make of the trading so far this morning on the heels of, much hotter than expected jobs number?
I mean, the only thing I can make out of this is what traders are looking at is they've just basically put the Fed in the rear, relatively flat. If that is the case, we expect earnings to continue to be strong because it's going down drastically, but it's not moving up. It's relatively flat. If that is the case, we expect earnings to continue to be strong because we have a strong economy, and so they're banking more on earnings and not really concerned about the Fed because I think you can realistically push rate cuts out to, at best, the end of the year, if not into next year. And every trader I'm talking to this morning basically said to me, if you told me yields would be where they are and stocks would be up, I tell you were crazy. So a lot of guys out there confused this morning, but there's definitely, market's definitely driving this. It's parent gains that we're back in the red in the S&P cash, but the momentum is definitely high. That seems to be where markets want to be, and we'll see how it plays out for the rest of the day.
What I find comforting is when Vince is confused and everyone else is confused, it's okay that I'm confused. Like, I don't feel like I need to, fake that. So it is confusing. Yes, yields are higher, stocks are still holding in. But can we talk about the dollar for a second? Because the other part of the story is just the stronger dollar. You're going to buy the dollar, do stuff with stocks, and you're going to sell bonds. What is some kind of resistance here on the upside for the dollar, Vince, by the way, as a recovering FX trader? So this is kind of his jam.
Yeah, there are so many things that come into the play as to why the dollar goes up or down. It's not just rates related. I wish I'd probably still be trading if that were the case. It would be nice and easy. But at the moment, that's what markets are focusing on. It's pretty much a rate story as to where they see the dollar going with the divergence of central bank policy. You saw, the Canadian central bank cut a quarter, the ECB cut a quarter, and now the Fed is maybe not going. And that puts all the balls in the dollar's court. And one thing it does do is the stronger dollar reduces the prices of imports and does help on the inflation front. So, from an FX trader's perspective, it's a good thing. Maybe not so much for the U.S. Treasury, but for the Fed, it should help with the inflation scenario, and it basically helps consumers.
So, Vince, any of your traders saying that they're making bets here that there's going to be no rate cuts in 2024?
I'm not getting that so much. I feel like I'm still in a minority camp, but I definitely have people basically saying, one and done for 2024 at best. Okay. And, we're out to now realistically the November, December space. I just keep going back to this, it's not where inflation is now, it's where it's going to be 6 to 12 months from now. No one obviously knows the answer to that question, but there's just as much a probability as inflation moves back up to where the effective Fed funds rate is as the other way around, is where traders want the Fed to move the effective Fed funds rate down to where inflation is now. And, they're not traders, they're economists, and they need to look a little bit further down the line, and they're looking at where things are going to be 6 to 12 months from now. And the indication is not very clear that inflation is going to be stay where it is, if not move to their 2% target. And frankly, I think when you're looking at a $35 trillion overall debt for this nation, thinking, a 2% inflation target is completely unrealistic. I don't think we're ever going to see that again.
All right, Vince, thanks so much for joining us. As always, Vince Signorello, he's kind of our market strategist, go-to guy at over Bloomberg News, that whole squawk thing here. Folks, how much we love these big take stories coming out of Bloomberg News. These are super in-depth reported source stories at really some key issues out there. Today is no different. The headline: Wall Street's CRE, the commercial real estate CLO machine, is wiping out apartment investors. I thought that was the safe part of the real estate market. I thought we were all just worried about office, but apartments also seeing some damage as well. One of the reporters on that story joins us here in our Bloomberg Interactive Broker Studios. His name is Scott Carpenter. bond market reporter for Bloomberg News. Scott, talk to us about what's going on in the apartment real estate market.
Hi, good to be here. Thanks very much. So here's what's happening. You have retail investors, ordinary people with a little, they're pretty wealthy people. Say you've got around $1 million of net worth. You can take that money, you can invest in apartments. But this is risky. People don't realize how risky this is, because when you put money into apartments in the way that they're doing, you're actually getting leverage behind the scenes from Wall Street in the form of loans that are packaged into CRE CLOs, or collateralized loan obligations. For a long time, for years actually, this works really well. Retail investors are making a lot of money, but that was because mainly apartment values were consistently climbing and interest rates were going down. This is very good for commercial real estate. Then when the Fed started raising interest rates, it started to go badly. All the leverage meant that the retail investors were exposed to really big losses. So we talked to a retail investor who lives in Yakima, Washington. She invested $200,000, and most of that is now gone.
So what is the problem? I mean, is it specifically rent-controlled apartments? Is this luxury apartments? Is this mid apartments? Where is the issue in that?
We're talking here about multifamily apartments. So it's not, maybe some of it could be rent-controlled. Mostly it's just plain old apartment complexes full of renters, and largely in the Sun Belt as well. The issue is that the valuations of these properties are very sensitive to interest rates. And when interest rates started going up, the property values started going down. And a lot of the companies that had bought these things, and into which the retail investors had contributed money, suddenly they couldn't afford their interest payments. And in some cases, they had to sell the properties. And when they sold them at a really big loss. I mean, we know that apartment values have gone down about 30% since their peak. And so when they had to sell, they were selling at these huge losses and passing those losses on to the retail investors. Now, a lot of what made these investments possible in many cases is because they were borrowing money, taking out large loans from mainly non-bank specialists on Wall Street. And that provided the leverage, and that is what exposed them to these big losses.
What are the apartment owners, what do they do, when they have some, when their inability to pay interest or pay principal, do they just sell these apartments to try and kind of raise cash?
Sometimes they get in a cash crunch, yeah. They have to pay interest, but they don't have the cash. So what can you do? You can go to your lender, you can try to get an extension, perhaps, or you can sell to somebody that is willing to buy it, even if it's at a big discount. In a couple of the cases where we talked to the retail investor, the property, and these are properties in Texas and Arizona, had to be sold at a very big discount. It gave the owner cash, but it was not enough cash to repay the money that the retail investors put in. It was enough cash to repay the debt from Wall Street. And that's the thing, the debt has to get repaid first. So when you sell at a discount in this way, it's enough money to repay the debt, it's not enough money to repay the retail investors.
So how many retail investors are getting affected by this? And what are some of the total losses that we're looking at? And is there any recourse for them?
It's really hard to know exactly how many people are exposed to this. But we do know that the altogether CRE CLOs is about an $80 billion universe. So I think it's fair to say that there's dozens of billions of dollars of I'm speculating a little bit there. We don't have great data on exactly how many retail investors are in this thing, but it's a lot.
Yeah.
And is there recourse? Well, a lot of retail investors are waiting right now. So in this case, the retail investor we talked to, she was exposed to losses because the owners sold. But there's a lot of other retail investors out there right now who are just waiting. They're not getting cash distributions from the investments they've made. They know that they could face losses down the road when the owner has to sell. That moment has not arrived yet. It could arrive later. Also, owners could perhaps somehow recover. Apartment values could go back up again. Interest rates could go back down. It could give them an off-ramp down the road. But there's a lot of retail investors out there right now who are just waiting.
Yep.
And they don't know what's going to happen to their money.
You know, the apartment REITs that I know are very savvy investors. They know how to value things. They know how to put a proper capital structure on things so they don't get in those cash crunches. But that's not what's necessarily happening here. I noted from your reporting here. Firms known as real estate syndicators. That sounds a little dicey to me. What's a real estate syndicator?
Isn't syndicator bad? Not a bad word in finance now?
Syndicator. And when we say syndicator in the way that we use it in the story, we're talking about typically mid-sized firms that are relatively young. They weren't around before the Great Financial Crisis. They rely heavily on social media. They have their own podcast shows to get the word out about their investments. They talk about how good, generally, multifamily investing is. They play up the stories of investors who've made a lot of money doing this. That's how they get the word out, and they're on YouTube. They're out there, and they're saying invest with us. And part of what makes it possible for them to do this is there was a change in the Jobs Act during the Obama administration that made it more possible to market these investments in a more public way.
All right, so that seems like a good way. We're going to have to stop it there due to time, but that people read the story, the big take story, because you learn a lot about kind of some of the pitfalls out there in real estate. And believe it or not, just reading this story, I was like, boy, we've seen this time and time again in different asset classes.
Just not with social media.
Exactly. Scott Carpenter, thanks for joining us. Scott Carpenter's a bond market reporter for Bloomberg News. Check out the Big Take story, Bloomberg.com/Big Take, or you can go on the terminal, NI space Big Take, to get the stories coming up. You bet. It is Friday, which means we talk municipal bonds with the one and the only Joe Mysak, the soon-to-be retiring Joe Mysak. That's coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
You check markets all day long at Bloomberg. We have got the Dow trading higher now, up by about 0.1%. S&P lower by 3, little change there, down 0.1%. NASDAQ on this jobs Friday down 42, drop there of just about 0.2%. World's biggest bond market got hammered as a solid jobs report this morning made traders dial back their bets on Federal Reserve rate cuts. 10-year 4.41%, 9 a barrel. GameStop shares right now are down 21%, drop there of just about $10 a share, $36.39 on GameStop. Among some of the other meme names, AMC Entertainment down now by 6.2%. Also keeping an eye on DocuSign. That stock plunging today after the e-signature company forecast billings for the second quarter that did fall short of the average analyst estimate. So again, recapping, stocks lower, S&P little change now down by 1 point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus with Joe Mysak.
All right, folks, today's Munis in Focus in Munis is brought to you by Build America Mutual. Build America Mutual insures U.S. municipal bonds that finance essential American infrastructure and provides guaranteed income to improve any portfolio. Be part of Building America. Invest in BAM insured bonds.
I was late on that. I'm sorry.
A little late on that.
Yeah.
All right, it's all right. We'll get more time. I mean, I thought this guy was retiring, but we can't get rid of him. Joe Mysak is still here. He's still here. He's still doing all this municipal bond stuff. I think he did the first municipal bond way back in the Revolutionary War. He was back there covering that. Joe, you're almost done with this whole municipal bond thing, but thank you for not leaving before we had this whole mess with the congestion pricing. I mean, I'm sending you down to City Hall, and you can just fix it. I mean, so what?
This is madness.
So talk to us about how the pause of congestion pricing implementation, how that's impacting the municipal bond market.
No, what a disaster. This is just ridiculous. You know, this was supposed to begin in a couple of weeks, and, you would have been able to bond off of this and help the MTA out, but Governor Hochul all of a sudden just plays politics, and what a disaster. And the legislature now is scrambling to come up with some sort of revenue, extra revenue for the MTA, $1 billion, which is not easy to find in your budget. So crazy. This is nuts.
So let me ask the question. So how would you have sort of packaged the bonds from the congestion pricing? Can you just connect those dots for me?
Oh, sure. Well, you get the money comes in, it's $15 a car, and you see how that's operating, and you see the revenue stream come in, and the old axiom is, you show me a revenue stream, and I'll show you a bond issue.
Okay, and then the bonds will be backed on the revenue stream?
And the bonds are backed by the revenue stream, and you could, get a multiple of that out.
See.
So that would have been very helpful to the MTA. And, this is really, most people think, a short-term thing, more of like a temporary embarrassment, if you will. And in November, after the elections, we might see it return. Liam Denning had a nice, interesting column today. NYC balked, but it can still lead on congestion fee. And he said there was a decent chance the suspension gets lifted once the elections are out of the way. And Governor Hochul herself doesn't face voters until 2026.
So here's how the math works, as Alex was mentioning. The MTA was planning to borrow against the $1 billion in yearly congestion pricing revenue to help raise $15 billion to upgrade subway signals and tracks and all that kind of stuff. So that's kind of the leverage there in terms of,
because, it's over time. You're not going to sell all 15 billion in 1 year, obviously. But speaking of billion-dollar issues, thank you for bringing that up. We have, so far this year, in the muni market, billion-dollar issues are very unusual. Okay, they're rare. And so far this year, we've had 25 mega deals of $1 billion or more. And the record set in 2020 is 26 for the year. So we're going to far surpass that.
So what do you make of that? Like, what's your read on it?
Well, the analysts have been saying, inflation has driven up costs of projects. So places have to borrow more. And for 2 weeks, JFK for the Terminal 1 has a $1.5 billion issue planned. So we might be able to mention that. We might be able to say that the record is broken by the time I retire.
Okay, very good. I love the minor league stadium business out there because municipal bond market plays a role there, right?
Oh, man. We saw 2 minor league stadium deals in 1 week. I think, we probably saw 2 minor league stadium deals in the last year. But we had, both in 1 week. And the most recent one was for the Spartan Burgers.
Spartan Burgers.
Kind of an interesting little deal, and it was federally taxable, so you had over 6% coupons on that one, or 6% coupon.
Well, actually, just let me circle back for a second to the $1 billion bonds that we've seen. You said 25. You're looking at JFK 1.5. Like, what's the takedown for that?
Pardon?
What's the takedown for that? Is there strong demand for that stuff? Huge.
Oh, we have seen blowout demand on deals this year. Demand for tax exemption. So far, we have, let's see, I think it's about $205 billion has been sold so far this year. And not even, we're not even done with the first half. So we could very well see in the muni market, and again, $400 billion deals are unusual. So we're certainly going to see an excess of that. I wouldn't be surprised if we saw $450 billion. But of course, I won't be able to defend that. No, I won't be able to be blamed for that prediction.
Alex, in Lower Manhattan, right by the offices that used to be for Kidder Peabody on Hanover Square, power part of Lower Manhattan back in the day, there is a classic bar, Wall Street, trader, banker bar, Harry's on Hanover Square.
Oh, I know Harry's.
Yeah.
Yeah, I used to work down on Wall Street.
Big time. Joe, what's Harry's at Hanover Square mean to you?
Oh, man. So, I remember getting a lot of stories in Harry's, believe it or not, because it was primarily a muni bond hangout, which seemed to me.
I didn't know that.
Does that mean that all the muni people who like it and talk about it go and chill there?
Yeah, they would go there, and of course now it's sort of reconfigured, but there was this big rectangular bar in the middle of the room, and be surrounded like 4 and 5 deep, smoking because smoking was allowed then, and you just be listening to people bark about trades they made that day. I remember I went to an especially long lunch. And I needed to get a preliminary official statement for as a matter of fact, it was a $1 billion deal for a very small Texas community, and of course the bonds were going to be locked away in some investment vehicle, and never really used. And the IRS not like that idea. But I did get that document out of such a lunch at Harry's at Hanover Square.
Sourcing, it's important. You need that stuff. But it has a place in the muni bond market too, right? Like not just hanging out and chatting. Like, is there a bigger muni?
Well, we had we used to have two Munifax screens there, as a matter of fact. It's one of those places where everyone used to go and just chat about how, what's going on.
I love that. When's the last day?
June 28th.
June
28th. We're getting there.
So how many years, Joe's retiring, so how many years total in covering this municipal bond space?
43.
43 years covering the municipal bond industry.
I'm not sure who's going to challenge that.
I don't know who's going to challenge that. And how many years doing that at Bloomberg?
25.
Wow. Okay. So what's the biggest change in the muni bond market from when you started?
Well,
I mean, it's never going anywhere. They're always going to need money.
No, when I started, a $50 billion year was kind of the average, and now it's nearing 400 billion a year, and that took quite a while. to get there. It's always been a retail-oriented market, but now you have growth of the separately managed accounts, which is individuals, but
the ETFs.
it's very professional. So a lot of professional involvement. Gosh, the earliest things we were covering were pay to play in the municipal bond market, and the MSRB prohibited pay to play. So underwriters can no longer give money to issuers from whom they're soliciting business. And the treasurers were very angry about that.
Yep, I'm sure they were. All right, Joe, guess what?
That's it?
That's it.
That's
for
it.
This week. It's not it because we got till June 28th with you, so we will get you on. Again, no doubt about that. Mark, make a note of that. Joe Misek, he is the editor of Bloomberg Brief, covering all the municipal bonds markets as he's been doing it for 43 years?
Yes, indeed.
43
Amazing.
years. Holy cow. Great stuff there. S&P 500 up about 0.1%. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Alex, and Lisa. President Biden says U.S. troops risked everything and gave everything on D-Day. The president delivered a speech at Pointe du Hoc in France today.
But still they kept coming. Gunfire rained above them, but still they kept coming. Nazi grenades thrown from above exploded against the cliffs, but still they kept coming.
Meanwhile, President Biden has, for the first time, publicly apologized to Ukrainian President Volodymyr Zelensky for a months-long congressional holdup in American military assistance that led Russia make battlefield gains. Biden pledged to stand by the Ukrainian people, and Zelensky made it clear, just like 80 years ago, this war cannot be won without the U.S.
Like it was during World War II, how the United States helped to save human lives, to save Europe, and we count on your continuing support and standing with us.
Biden and Zelensky met today in France. Back from France, the First Lady today is attending Hunter Biden's gun trial as the prosecution wraps up and rested their case. They called an FBI forensic chemist examiner who testified residue on the leather pouch that contained Hunter Biden's gun that came back was positive, was cocaine on it. The president's son has pleaded not guilty to 3 felonies. It will be the end of an era with Pat Sajak's final episode on Wheel of Fortune. Tonight's broadcast ends his 41-year run hosting the game show.
Well, the time has come to say goodbye. It's been an incredible privilege to be invited into millions of homes, night after night, year after year.
Brian Seacrest will take over. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P. They are both higher right now. NASDAQ in the red. Little changed on the S&P 500 index, up by about 0.1%. Jobs Friday, Dow up 68 now, up 0.2%. NASDAQ does remain in the red, lower right now by 7 points, down less than 0.1%. Payroll gains and unemployment rate both picking up at the same time. 10-year yield 4.41%, with a 2-year now yielding 4.85%. Spot gold lower by 2.8%, $23.09 for an ounce of the precious metal, while West Texas Intermediate crude just about flat on the day right now, unchanged, $75.56 a barrel on WTI. Bottom line here, world's biggest bond market getting hammered as a solid jobs report this morning makes traders dial back their bets on Federal Reserve rate cuts. We're keeping an eye on GameStop shares, plunging now by 18.2%. Among some of the other meme stock names, AMC Entertainment down now by 1.7%. Recapping, S&P up 3, up 1/10. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in finance and economics and business through our lens of Bloomberg Intelligence analysts. They cover 2,000 companies in 130 industries worldwide. And for the month of June, Bloomberg Radio is committed to bringing you segments and guests that are focused on the topic of equality. And today we're speaking with Laura Mowdy. She's CEO and co-founder of Bobby. Laura, thank you so much for joining us. We appreciate you being on this first segment for us this month. What is Bobby?
Bobby is an organic, pasture-raised infant formula company, and we are raising the bar in quality of infant formula here in the country.
So we talked to you during what we had a shortage of infant baby formula. Can you remind us how that all developed and how that came about and maybe how that impacted your business?
Well, I think we can all remember it happened overnight. No one saw it coming. As a country, we weren't prepared. Bobby itself, being a small company at the time, also wasn't prepared. One company that was feeding over 50% of babies born in the country had a contamination, and they had to close their doors. And when they did, they weren't able to meet the supply needs of feeding American babies. And overnight, we saw out-of-stock rates climb to around 70%, which essentially meant that American families were driving town to town and in some situations, state to state, where there was only a 30% chance of being able to find food to feed their baby.
So what is the problem with infant formula that you're trying to fix?
It's pretty simple. We need to be more resilient. Let me give you a little bit of a mother's opinion on this as well. I think the infant formula shortage, a moment where we were not resilient enough to be able to feed our next generation, was actually a bit more symbolic in many ways of what's really broken in the country. One might argue that our entire democracy is only as strong as our ability to be able to feed our babies. And we were not resilient in any way. One facility went down and the entire industry fell to its knees. What we need to see is more manufacturers in the heartland of America, where we can ensure that there's always enough supply to be able to feed babies.
Yeah.
And I think the way we do that is incentivize more domestic manufacturing.
But aside from that, Laura, like with Bobby, what is the problem that you're trying to fix with the infant formula that's so entrenched in our society today?
We need to be able to look at this essential good as not just a necessary, but a necessary that's extremely important in the development of our next generation. The quality of what goes into that baby bottle, the nutrition that we're giving, again, our babies and the next generation is fundamental for their growth and development. And I think we've ignored it for far too long. For the last few decades, the same infant formula that you yourself was drinking as a child is probably the same infant formula that you're now buying for your own baby.
Wow.
Science has evolved. A very long time ago. And in every other industry, we've seen an evolution. And I think this might be the last remaining industry we've seen this.
So you talked about, Laurie, we need more manufacturing and more diversified manufacturing sourcing here in the U.S. What are you guys doing on that front?
Well, not only did we go out and we made a commitment that we were going to invest $100 million into domestic manufacturing, we bought and we have reinvested in a facility in the Heartland in Ohio. And that facility now has the ability to be able to feed up to 15% of babies born in the country. But on top of that, we also worked very closely with legislators to introduce the Infant Formula Made in America Act. This last month with Congress. And what it essentially allows is incentivizing more players like Bobby to be able to break into the industry. It takes a lot of capital and a lot of time, and we need a lot of support from government officials to make this happen. So hopefully, if this bill gets passed, which is what I believe is a very bipartisan solution to being able to not be in another shortage again.
And how did you come up with this idea? Did you come from Wall Street? Have you always been an advocate of this? Like, where did this all come from?
Great question. Do not come from Wall Street. I actually don't even come from CPG, infant formula at all. My background is in tech. Before this, at Google and at Airbnb. I had my first daughter while I was an executive at Airbnb, and I experienced all the ups and downs of parenthood, and one of many being the disappointment that I wasn't able to exclusively breastfeed her. And when I turned to infant formula, I felt a feeling I had never experienced before, that shame and guilt that I wasn't able to give her what I thought was so natural. And then as, a businesswoman, I was staring at the back of the can going, we can do better. And that set me on a crazy research journey to study what was best for my baby. And I'm here now 8 years later, and many more children, by the way. I just had my fourth kid, who is happily guzzling some Bobby.
Congratulations. Laura, what's the risk that we have another type of, supply shock here, to supply disruption? Are we any better off today than we were before?
I get sad even trying to answer that, because I don't believe so. It's very easy to get complacent in these moments when shelves are stocked. But when you look at the reason that we got here, have we introduced many more manufacturers? No. Have we been incentivizing new players to break in and break up the concentration? No. So I believe we're still one bacteria away from this potentially happening again. And my big call to action is that we just don't allow complacency, seeing shelves get stocked, as a way to ignore the real solution, which is let's get this bill passed and more manufacturers up and running.
What is this, aside from like money and funding, what is the next step after we try and get this bill passed that you're sort of looking at right now?
I think it's culture change. So taking a hard pivot from domestic manufacturing, we need to have the level of respect that infant formula deserves. And not just infant formula. I mentioned it was symbolic to so many different things. What's broken in our society is that the same government who says that you should be exclusively breastfeeding is also telling mothers that they need to get back to work immediately. We need to pass paid leave. We need to fix childcare. We need to be able to support parents being parents in America. And if Bobby can have any role in changing the culture by which it means to have a baby in this country, then we're doing our job.
How are you doing that? Just these kind of conversations? Is it advertising? Like, how do you do that?
Yeah, I mean, it's a lot of activism. And I think it's a word that sometimes gets overly used, but it's activism, and the underlying meaning of that is action. And we're taking a lot of action by reaching out to our customers and the public and saying, sign this petition to be able to get this bill passed, raise awareness on the Black maternal mortality crisis by putting our own brand dollars behind raising awareness on this. We've recently won a few awards for, again, not just marketing infant formula, but marketing the issues around it. And I think if more companies, again, can lean into fixing the systemic issues for why they fundamentally exist, then you get to change culture.
Hey, Laura, we got to leave it there. Really enjoyed talking to you. I wish Bobby was around when I had my daughter almost 10 years ago. Laura Modi, CEO and co-founder of Bobby. We're going to bring you some of these great stories over the month of June. That was just an fascinating conversation.
Yeah, we first, at least I was introduced to her during the shortage. Very interesting.
This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet looking at a downhill slope for shares of Vail Resorts after earnings. That stock right now down 12.9%. The ski resort operator published third quarter earnings per share that missed estimates. Analysts are reacting negatively. JP Morgan, for instance, cutting its stance to underweight from neutral. Again, shares of Vail Resorts uses the ticker MTN as in Mountain, down now by 12.9%. We've got Rent the Runway down 5.6% after the consumer goods rental company reported first quarter revenue that slightly missed expectations. Bloomberg Television caught up this morning with CEO Jennifer Hyman, who talked about expanding the company's brick and mortar efforts.
So we see that women would come into the store to get dressed for work every single day, or they'd come in groups after work to get dressed for their night out. And that really just built the virality of Rent the Runway in the markets that we were in. So we're going to be super aggressive about going into retail throughout the United States. We're opening our flagship store in New York again this month. It's a soft launch for the summer with a huge launch happening in September. And we believe that the online plus the in real life experiences really drive tremendous, not only growth, but brand love.
Jennifer Hyman of Rent the Runway shares down by 5.6%. A Tesla shareholder is suing to challenge an upcoming proxy vote about whether the electric car maker should move its corporate home to Texas and reapprove a $56 billion pay package for co-founder Elon Musk that was thrown out by a Delaware judge. Tesla shares today, they are advancing now by just about 0.3%. And those are some of our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. I'm Alex Steele with Paul Sweeney and Charlie Pella. This is Bloomberg Intelligence Radio. We are live from the Interactive Broker Studio right here in Midtown Manhattan. Let's kick you off right now with world and national news. And for that, we go to Michael Barr. Michael?
Thank you very much, Alex, Paul, Charlie. President Joe Biden has, for the first time, publicly apologized to Ukrainian President Volodymyr Zelensky for a months-long congressional holdup in American military assistance that led Russia make battlefield gains. Zelensky was grateful to have his military revitalized, but hoped an end to the war would come soon.
I hope that it will be a first step on this way to peace. We need peace in Ukraine.
Biden told Zelensky while both were in France today, Congress waited 6 months before sending him a $61 billion military aid package. Meanwhile, President Biden spoke today during the 80th anniversary ceremonies of D-Day at Pointe-du-Hoc in France.
American democracy asks the hardest of things, to believe that we're part of something bigger than ourselves. So democracy begins with each of us. It begins when one person decides there's something more important than themselves.
The prosecution has rested its case against the president's son, Hunter Biden, who is accused of lying on a federal gun purchase form when he said he was not using drugs at the time. He bought a revolver in 2018. They called his ex-wife and a former girlfriend to testify that his drug use was habitual. Hunter Biden's lawyer, Abby Lowell, has said he did not believe he had a serious drug problem at the time of the gun purchase. Finally, oh great, who can't use a big, hairy, flying spider? The Joro spider is creeping its way up the East Coast. The shiny black and yellow Joro spider can grow as big as your palm. I said as big as your palm. As big as your palm. If there's any good news, don't expect to find one in your garage. There's Shine, North Carolina State University entomologist Clyde Sorensen.
They're not a spider that prefers dark and dusty places like a black widow, above vegetation where their webs can be encountered by flying insects.
A native of Asia, but first spotted in Georgia about a decade ago, the Joro has been spreading its habitat north, shooting a web parachute and drifting on the wind. That's much better. Global news, 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr. This is Bloomberg. Paul, Alex, Charlie.
All right, thank you so much, Michael Barr. We really appreciate that. A spider as big as my hand. I don't know.
Yeah.
I don't know about that one.
All
I don't think my daughter would be like,
No.
"Oh, it's so cute," and
Yep.
I'd be like, "No, thanks. No, thank you very much."
All right, we just got a little bit of time left, but I'm flipping through and I see we got the French Open going full blast here today. I need to get the latest because we got some big time matches going on there. So we got Molly Smith in Bloomberg News. She covers the economy or something, but we want to talk tennis. Molly, what do you got for us today?
I'm so glad I'm here. You know, I was actually coming on to talk on the next show, but this is obviously more important.
Yes.
So we actually, just as of like 2 minutes ago, we're going 5 sets between Carlos Alcaraz and Jannik Sinner in the men's semifinal. I mean, this is the match of the tournament. These are the two best guys in the world right now. I've obviously been focused on the jobs report, but this has been a thriller.
Okay, what else? I'm not following this at all. I know nothing about it. I just know that Djokovic is out, right?
Yes, he withdrew with a knee injury. I mean, he actually played a lot better than I thought he would this tournament. Had a lot of questions coming into it about the level of his play. Was certainly pushed, won a couple of really big 5-setters, and unfortunately sustained a tear to his meniscus in the process, which I think he actually had surgery on already.
Yes. Now, how about the women?
Yeah, so the final tomorrow, Iga Swiatek and Jasmine Paolini from
nobody
Italy.
beating Swiatek.
Nobody's beating Iga. Was that the first time you said her name?
Correctly.
Oh,
correctly.
You did it.
I've said it correctly. It's only taken a
Amazing.
couple of years. She's just steamrolling over everybody.
It really is. And I mean, she continued to steamroll over Coco Gauff in the semifinal, now 10-1 against Coco, who really just cannot get that matchup right.
All right, so again, Molly Smith, she covers the economy, like jobs and stuff like that. That's what she was going to be here talking about. But I figured since we saw Molly, let's get
So
the
that's what
update
happened.
on the French Open. So
Very swift, Paul.
just kind of co-opted Molly to get a little bit of an update there. Coming up, we got Balance of Power. Joe Matthew, Washington, D.C. That starts, you bet, right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Payrolls jumped in May, but so does the unemployment rate. Welcome to the fastest show in politics, as monthly jobs data paint another mixed picture that we will discuss momentarily with Bloomberg economic editor Molly Smith. There goes our music. Was it something I said? President Biden announcing a new aid package for Ukraine as he renews a call to protect democracy from the cliffs of Normandy. We'll get to that and the campaign trail after a look at Wall Street. For that, here's Charlie Pellet.
Hi, thank you very much. And here's what's going on, Joe Matthew. More music, good music, but your voice is always great enough. We've got the Dow, the S&P, NASDAQ, all trading mixed right now. Jobs Friday, right to the numbers here with the S&P up 4, gain there of just about 0.1%. We have got the Dow moving higher, holding on to gains of 58 points right now, up by about 0.1%. NASDAQ, though, in the red, lower by 7, little change, down less
James,
than
can you hear me?
0.1%. We have got the world's biggest bond market getting hammered as a solid jobs report made traders dial back their bets on Federal Reserve rate cuts. 10-year, 4.41% right now on that 10-year, the 2-year, 4.85%. Spot gold down 3% right now. We're looking gold down $71 the ounce, 23.05. Going to be very interesting to see where gold shakes out today. Will it be above or below 2,300? West Texas Intermediate crude down 0.2%, 75.36 for a barrel of WTI. Administration reaction to the jobs report from acting U.S. Labor Secretary Julie Su, who told our Joe Matthew today the report is indicative of an economic soft landing.
It's the kind of thing where we're always vigilant about where the economy is going. But based on where we were, remember in 2021, right? The president came into office, COVID was raging, there was no national strategy to address it, unemployment was very, very high. People didn't know if they were gonna get toilet paper if they went to the supermarket. And now we have historic job growth, low levels of unemployment. I think it is the very definition of a soft landing.
Acting Labor Secretary Julie Su speaking with our Joe Matthew. And of course, our Molly Smith's going to have a whole lot more on markets and the jobs report coming up in just a moment. Recapping, 10-year, 4.41%. S&P up, barely up 3 points right now, up less than 0.1%. Balance of Power continues now. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie Pellet, thank you. Welcome to the Friday edition of Balance of Power, a big jobs day. Yes, as Charlie refers, we started our day out on the patio at the Labor Department with the acting secretary, and it was just a short time after the data were released, painting two different pictures, exactly like Anna Wong told us was going to happen, and the team at Bloomberg Economics. Which survey do you care about here? As we see a jump much hotter than expected in payrolls, but also an increase in the unemployment rate, and everyone's talking about what's really under the hood. That's why we turn to Molly Smith. Bloomberg Economics editor is with us live from New York. And Molly, I'd love your take, because Molly's the person who gets the data. The second it comes in and has to regurgitate this into a story that makes sense to everyone who's about to trade on Wall Street or whatever they're going to do with the news. And Molly, you get two different stories here today, don't you? Which one is more important?
That's right. And, we were struggling with that at 8:30 as to what direction we're going to go in with this story, because as you said, this really does give a bit of a mixed picture depending on which survey you're taking the better cue from. But if you're looking at payrolls, which certainly the market reaction was indicative of, you're just looking at a blowout jobs report, and that payrolls number of 272,000 coming in above all estimates, and that's about 100,000 more than the pace that was last month. So that's just really, it's so tough to square these, and the signals that you're getting from each of the two surveys. I think, parsing through these different economist reactions, it seems like most people are thinking that the true signal of the labor market is somewhere in between them, that payrolls growth is still strong, but moderating, and that the job market overall is very gradually softening.
So when Bloomberg Economics says we believe the household survey, pointing to the unemployment rate here, currently offers a closer approximation of reality than non-farm payrolls, what part of the survey does it bring us that's different?
Right. So the household survey is, it's a bit different from the business survey. So this one is much smaller, and this surveys actual households. So if you, for example, get a letter in the mail or a call from the Labor Department, and they will ask you, were you working last month or during this particular week last month, versus the bigger survey that captures the headline non-farm payrolls number, that comes from a survey of hundreds of thousands of businesses. So very different.
Household includes agriculture, right? Which kind of paints a different view of the labor force all the way around. Is it more accurate?
Exactly, yeah. So the agriculture piece comes in on the household survey side. That's why the establishment survey is called non-farm payrolls. So it's very different. And the household survey is what we look to for the unemployment data. And that's what was obviously the most concerning part of it, where you saw a big drop in employment this month, fewer people working, and you also saw fewer people participating in the labor force, and that also contributed to a rise in the unemployment rate.
Yeah, what do you make of that? I asked the labor secretary about that this morning. I think it was 400,000 had dropped out of the workforce.
Correct.
We're currently not back to the participation rate pre-COVID. And how do you square that?
Right. It's really challenging. I mean, I'm still, the report came out like 3 hours ago. I'm still wondering what it means. But I think, the big
And I'm here to interrogate you about it, Molly.
I know you are. You always put me on the spot, Joe. It's what makes this show so great. That really is the challenge because you want to see greater labor force participation, and it has generally been coming back from, the drop off in COVID, but still very slowly. But something that was a positive that I'm sure the Biden administration would like to see is that when we look at the prime age participation rate, so this is looking at people ages 25 to 54, so in those so-called prime working years, that actually increased to the highest in 2 decades. So that is positive. But when you factor in other age groups, it was slightly lower.
Can I ask you about this immigration effect? I don't know if you have time for this in your research or homework at this point, but there was a note out this week, I think it was from Standard Charter, that said that undocumented immigrants made up of something like half payroll growth since October, and that we could be talking about 100 to 109,000 jobs a month. As Joe Biden puts this executive order in place that would lower the threshold for the number of undocumented migrants coming across the border, are we going to see a change in jobs data?
This has been a really big debate in economic circles too, not just debating which survey is the better signal of the labor market, but also which survey better captures the impact of immigration. That there's a big debate circling around about that. And a lot of people seem to think that the establishment survey does a better job of that, hence why you've seen that number be so robust, like the 272,000 today. Others think the household survey is maybe more indicative of where immigration is going to be captured. It's really tough to say. I think either way you can conclude economically that immigration is positive for the economy without wading into politically which side you lean on.
Fascinating conversation, as always, as you're clearly still, I love that the gears are still turning at noontime, Wall Street time. Molly Smith, great to have you, as always. Bloomberg Economics editor. She doesn't only report on tennis, she covers the economy, too.
Here for that, too.
I hope you have a great weekend.
You, too.
You know that's right. That's her full-time job, which is what we try to keep her talking about here on Balance of Power. I'm Joe Matthew in Washington, and glad you came along on the radio, on the satellite, and on YouTube, where you can search Bloomberg Global News and find our live stream anytime we're on the air here from Washington. This is like one of the best deals going. We'll save a seat for you in the studio, see all of our guests, see the images that we're talking about on the interwebs. As we turn to, speaking of which, another important day for Joe Biden. In Normandy still, the Point to Hawk speech, as he delivered his message on protecting democracy, standing up to authoritarianism, with the sea behind him, standing on the very cliffs that the Rangers climbed at Point to Hawk on D-Day. Here's the President of the United States.
We're not going to walk away from you. I apologize for those weeks of not knowing what's going to happen in terms of funding, because we had trouble getting the bill that we had to pass that had the money in it from some of our very conservative members who were holding it up.
All right, clearly not from the speech, from his meeting with President Zelensky earlier today, which coincided with his address and his visit to Normandy to mark the 80th anniversary of the D-Day invasion. The president announcing a new $225 million aid package for Ukraine during that conversation, as he spent time and even apologized to Zelensky. The word from the president: "I'm not going to walk away from you." And it brings us to our conversation that I've been looking forward to here today, a special one from Ukraine. Ilya Ponomarenko, the co-founder of the Kyiv Independent and the author of an important book called "I Will Show You How It Was, the Story of Wartime Kyiv." Ilya has been in the field in and around Kyiv and in the fight since this started, since Russia's invasion of Ukraine, and brings a unique on-the-ground perspective here, literally, with what's going on. Ilya, thank you for taking the time to talk with us. It's great to have you here on Bloomberg. I wonder your thoughts today when Joe Biden not only made that address, but sat down with President Zelensky. Do you believe Joe Biden's resolve when it comes to supporting this war?
I do believe him in terms of trusting in Ukraine, in terms of having a positive feeling about Ukraine. Joe Biden, since many years ago, has got a reputation of a vice president and then a president of the United States who truly loves Ukraine. He loves this country. In many ways, this is why we were lucky to have him as the top decision maker in Washington, D.C. However, with his good intentions, at the same time, we often see this in the picture that his entourage is overcautious about the steps, this notorious concept of escalation management. He is definitely between the hammer and the anvil of domestic politics, with a lot of American fatigue about foreign wars and American interventions overseas. He's definitely under severe pressure not to meddle America into something else overseas that Americans are tired of. So I would say that, yeah, we truly believe him. We truly believe that he means it. He really wants Ukraine to be free and independent, but at the same time, his hands are tied in many ways by his own device.
Well, there's a lot of debate here about whether the delay in approving funding for Ukraine, the better part of 6 months, set back the Ukrainian military or even turned the tide in Russia's favor. Can you tell us firsthand what that delay meant for Ukrainian forces in this stage of the war?
Well, I'm not sure that we have all 100% of the material to make complete conclusions about these months without U.S. aid and the effect. But I think we can safely say that it has not dramatically turned the tide for the war, but at the same time, it played really strongly into the hands of the Russian military. It gave them a very wide and very dangerous window of opportunity, especially when it comes to attacking Ukrainian civilian infrastructure, which is why in many ways our air defense was so weakened, and which is why in many ways our energy infrastructure and energy supply is such a severe crisis right now. At the same time, it was an extremely dark time on the front line. Lots of things lost, not only because of the lack of munitions, lack of weapons, but also because of a lot of mistakes from the Ukrainian side, but unfortunately, admittedly. But I must say that given the dire shortage that was precipitated by this delay, we are extremely lucky to not have lost even more. In many ways, that dark period was mitigated by the heroism and extreme inventionists of the people on the ground, of soldiers of the Ukrainian military. So they used a lot of ways to bypass and mitigate this dire shortage. without this dedication, extreme dedication in so many cases, the situation could have been way, way worse. And we are lucky to have it.
As we spend time with Ilya Ponomarenko, who's the co-founder of the Kyiv Independent, we talk a lot about morale, or we hear reports about the state of morale among Ukrainian forces. Ilya, how about Ukrainian people? When you're in Kyiv, people are trying to live their lives, even as missile attacks are being aimed at apartment complexes. The lights are on and off, the power, the heat is on and off. What do the people of Ukraine think of the war at this stage? What appetite do they have to keep fighting?
Ukraine and Ukrainian society, it has pretty much everything of what could be expected from a society after more than 2 years of an extremely bloody war. It's about the entire spectrum, the whole spectrum of so many emotions that could be found in a complex society in such a dark time. It's about despair. Some people are losing hope. Some people are still extremely motivated, military and civilians. Some people are more or less impassionate about this. Many try to live their lives. Many are sort of panicking on the internet, and which is why in many ways it's not a very good idea to judge on the social discourse from social media. At the same time, there are a lot of people who maintain the normal life, maintain the motivation to go on, to work, to donate to the military, to help, to get mobilized, even though, of course, the stream of volunteers has dropped over these 2 years. So it has everything that could happen to a nation that has lost such a lot and has suffered such a lot. Mm-hmm. But yes, you are absolutely right to say that no matter what happens, essentially what happens is that people get adapt. I just got back home from driving through the streets of Kyiv and most of the city was in a blackout, power cuts to control the severely dwindled energy capacity. And yeah, most of the restaurants, they keep working. Everybody uses power generators, diesel generators, small power stations too. It's a very normal thing right now that even the large malls in Kyiv, outside Kyiv, they also use really powerful electric station to absolutely go on working. And I must say that these things, this continuation of normalcy, it really works well for the public morale.
Ilya, I'm really glad that you could spend some time with us. You described the war in Ukraine as, quote, an idiotic war for the sake of just one delusional old man's monstrous act of megalomania. The book, I Will Show You How It Was, the story of wartime Kyiv. Ilya Ponomarenko joining us live from Kyiv on Bloomberg. We do thank you for your time. Come back and talk to us again. I'm Joe Matthew in Washington as we carry on the conversation, coming up with the help of Bloomberg Economics' Jenny Welch, our geoeconomics analyst, on this latest batch of aid for Ukraine and the message from the president today in Normandy. This is Bloomberg.
6:21 on Wall Street. We do check markets all day long here at Bloomberg. Push back the rate cut. Economists at J.P. Morgan Chase, among the very few that were still predicting a Federal Reserve interest rate cut in July, have changed their call to November after this morning's employment data came in stronger than anticipated. Economists at Citigroup also have changed their call to September. S&P right now higher by 9, gain there of 0.2%. We've had NASDAQ turn around in the past 20 minutes, up now by 16, gain there of just about 0.1%. Dow Industrials higher by 53. That's an advance of about 0.1%. 10-year at 4.41%. The 2-year on this jobs Friday, 4.85%. Spot gold down 2.8%. Big move lower, down $66 the ounce. Right now we've got gold $23.09 an ounce. West Texas Intermediate crude, little changed, down 8 cents now to $75.47 a barrel. For WTI, a drop of just about 0.1%. We are awaiting those roaring kitty comments on GameStop that have been scheduled for noon on YouTube. GameStop shares are plunging today by 28.4%. Among other meme stocks, right now AMC Entertainment down by 6.5%. Again, recapping, S&P up 9, gain there of 0.2%. Balance of power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, we thank you. Keeping an eye on the markets for us as we cover politics on Balance of Power every day at this time on Bloomberg Radio, the satellite, and YouTube. Welcome as we carry on our conversation that the president started, well, I guess yesterday, even though he continued it earlier today in Normandy, back to the same spot that Ronald Reagan spoke at in 1984, the Boys of Point to Hawk speech. President Biden had his own version of it today. Let's listen.
As we gather here today, it's not just to honor those who showed such remarkable bravery on that day, June 6, 1944. It's to listen to the echoes of their voices, to hear them, because they are summoning us, and they're summoning us now.
The day after marking the 80th anniversary of the D-Day invasion, and a wonderful ceremony that we talked about at this time yesterday with U.S. veterans who were likely made their last trip to Normandy for this moment. And the president's wrapping it all up into one big message as he sat down earlier today with President Zelensky to commit another round of aid, in this case $225 million worth. And it came with an apology. As the president said to Zelensky, I'm not going to walk away from you. We're still completely in thoroughly, apologizing for the delay in funding. It's a good time to catch up with Jenny Welch, our Bloomberg Economics geo-economic analyst. It's great to see you back at the table. It's been too long. This is a pretty important moment for this president. We can kind of paint out of a couple of different buckets here. It's interesting that it's coinciding with this sideline meeting with President Zelensky. Not a coincidence, I'm sure, because it really feeds into this message that he's sending without mentioning the name Putin.
Absolutely. And this is something that we've seen very much at the forefront of the 80th anniversary celebrations. It's also going to be something that's for discussion at the other part of his trip to the G7 leaders meeting next week in Italy. Ukraine very much on the agenda, and in some ways at a crossroads. And that's part of the conversation, too, about how do we sustain support for Ukraine, given what the president was just referencing there with delays in congressional approval and the upcoming U.S. election.
Yeah, absolutely. We were just talking with the war correspondent, Ilya Ponomarenko in Ukraine, about that delay. And there's an argument about whether this actually held back the war effort or turned the tide in Russia's favor. How long will it take until we know that? Is it possible to make that judgment?
Well, we had already seen earlier this year Russia make some gains along the front line. And even in more recent months, once Congress had made that decision, it still takes time for the aid to flow out to Ukraine.
Sure.
Now, what the president announced today is likely to be a drawdown package, which means it's coming right off of U.S. stocks and shelves into Ukraine's hands. So that should arrive relatively quickly. But some of the other aid, it comes in the form of contracts that Ukraine has to put in with U.S. companies, and that's that's going to take time to come out on the other side in the form of actual weapons. I think the other key change, though, has been this policy shift on how Ukraine can use those weapons. And that's going to be a really important game changer for Ukraine, especially around Kharkiv, but potentially other parts of the front line if it expands there.
Well, what do you make of that? Because we've had you in multiple times talking about the evolution of policy, whether it's on an M1 Abrams tank or an F-16. Now it's actually usage. Kharkiv is the starting point, like everything else, do you think, or does it stay limited to that area? Because you were asking the question on the terminal at Bloomberg Economics whether this could lead to escalation, whether it could lead to a nuclear conflict. The whole idea here has been that we raise the risk of a direct confrontation with Russia.
I think right now the risk of escalation and this growing to a conflict that involves U.S. and NATO forces is relatively low for a couple of reasons. One, as you noted, right now this policy just applies to the region around Kharkiv. Second, it only applies to relatively shorter range weapons. This isn't going to allow Ukraine to really strike into the Russian
So
heartland.
when we say U.S. provided weapons, these are specific weapons that we're talking about, not anything that we send them.
This applies to specific weapons, and it doesn't apply, importantly, to longer range weapons like ATACMS. France, Germany, and the UK have also given similar authorizations, but likewise, especially in the case of Germany, haven't included those longer range strike tools.
So it sounds like another half measure, though. Is this something that expands over time?
I think the question is more, does it expand along the front line? Like Kharkiv is clearly facing the immediate threat right now, and throughout the duration of this war, Ukraine's had one arm tied behind its back, being able to see Russian forces clearly assembling on the other side of the front line, but not be able to attack them. This policy denies Russia that advantage, and I think obviously the first application of it will be Kharkiv. Remains to be seen whether they spread it elsewhere.
There was a time when we were talking in advance of the delivery of aid, and it was a months-long debate. That it wasn't just weapons that Ukraine needed, that it was a serious manpower shortage. That part doesn't change overnight. What does Ukraine do about that?
Yeah, I think that's going to be a huge challenge for Ukraine, especially as it balances its kind of current and its future needs, right? One of its concerns has been you don't want to pull up too many young men into the draft, because then are you going to have a population in the future to support the rest of the country? Wow. I think what this does do, and the bright side for Zelensky, is that it underscores both the change in policy, the delivery of aid, and then now the G7 leaders coming together to discuss how do we future-proof this support so that regardless of what happens in November, regardless of what the U.S. Congress does, Ukraine is still getting support from us. That gives him and gives the people of Ukraine confidence that this is a fight that they're not in alone, that they have their allies' support behind them.
So it's on to the G7. To your point, this trip to France resulted in an important sideline meeting with President Zelensky. I'm sure there's going to be much more talk about Ukraine with our G7 allies next week, but what else is being discussed on the sidelines? Or is it going to be a ceasefire in Israel? It's the meetings that we don't get to see that frequently move the ball on these.
Sure. So I'm sure Israel will come up. We've already seen the G7 come out and voice support for the ceasefire plan as outlined by President Biden. I'm sure they'll come out with additional statements on that. Another issue the G7 wants to talk about is AI safety, impact on workforce, use by military forces. Remains to be seen how concrete of a proposal they can come together on that. Yeah. And then interestingly, they have this somewhat oblique reference to China. They want to discuss overcapacity and economic security issues as well. And I think that's tapping into these ongoing U.S.-EU concerns about Chinese overcapacity right ahead of the EU is due to make a decision on those Chinese EV tariffs.
Well, that's going to be a big story for Bloomberg. What do you suspect will come from it?
Well, the decision's been delayed until after the EU parliamentary elections later this month, but I think all signs point to there will be some form of EU action. There's a debate, obviously, within the EU between, in particular, Germany on one side and France on the other. But I think given the weight of concerns about overcapacity, we're likely to see something happen on that. And then the key question will be, how does China respond?
Does Donald Trump come up in these meetings? I'll get you in trouble now. I'm just, I know that this is Joe Biden, but he tells the same story. This is the first time he went to, I think it was a G20, and they asked him, he said, America's back, and he was asked for how long. He's going to be telling stories like that on the campaign trail. He's actually going to be with those people next week. Is this the conversation in the air?
If it's not the unspoken elephant in the room, it will, I'm sure, come up, especially in sideline conversations. And again, I think that the upcoming U.S. election is a key reason why now EU leaders are considering this U.S. proposal on how to use Russian frozen assets to support Ukraine. It was something previously they've been very reluctant to do, but now I think they're concerned about how sustainable will U.S. aid be in the future.
Yeah, what would Europe think of Donald Trump's idea of 100% tariffs on China, for instance? That would really interrupt the conversation that's already being had here.
I think the duality of a former President Trump returning to the White House when it comes to Europe's actions on China is twofold. Yeah. One, we see Europe already starting to talk about how they might need to take a tougher stance towards China, in part to, I don't want to say appease, but maintain good relations with the White House. Yes. But on the other hand, certainly if the White House moves very strongly in this one direction without a lot of consultation with the EU, you risk a wedge developing there, and the EU not being able to follow along as quickly or as harshly as the United States is.
Is it the same conversation inside NATO when it comes to a potential next term for Donald Trump?
I think the conversation within NATO, and one that we've seen actually since earlier this year at the Munich Security Conference, is countries already realizing
start paying up more.
We got to spend more on defense because that's something.
So that's a Trump effect.
I think it's definitely a Trump effect. I think it's obviously a Ukraine effect too. We saw defense spending start to rise after Ukraine as European countries see this existential threat in their region. But I think it's been exacerbated by the idea of former President Trump returning, and it's something that he had really pressed European partners on during his first 4 years, and so it's certainly something that he's going to be pressing them on if he gets a second term.
Fascinating. Great to have you back. Always a great conversation with Jenny Welch. As you well know, if you watch this program, a Bloomberg Economics geoeconomic analyst. As we look ahead to the next phase here, and that is the G7. We'll be talking about that a lot more next week here on the fastest show in politics. We'll assemble our panel next, and that's after we get an update on world and national news. For that, we turn to Amy Morris in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. The prosecution has rested its case against the president's son, Hunter Biden, who was accused of lying on a federal gun purchase form when he said he wasn't using drugs at the time that he bought a revolver in 2018. Prosecutors say Hunter Biden was actively using drugs and lied on that form, and they called his ex-wife and a former girlfriend to the stand to testify that his drug use was habitual. Attention now shifts to lawyers for the defense and whether they'll call Hunter Biden to testify. About $225 million in U.S. military aid is making its way to Ukraine. That delayed funding, blamed on political infighting of the U.S. Congress, allowed Russia to make gains on the battlefield. President Volodymyr Zelensky putting aside his frustrations on behalf of the Ukrainian people to make it clear that just like 80 years ago, this war cannot be won without the U.S.
Like it was during World War II, how the United States helped to save human lives, to save Europe, and we count on your continuing support and standing with us.
President Biden offering an apology to Ukraine's president for that 6-month wait. A U.S. military-built pier designed to carry needed aid into Gaza by boat has been reconnected to the beach in Gaza. It had been broken apart in storms and rough seas. Central Command Vice Admiral Brad Cooper said operations at the reconnected pier will be ramped up soon. The goal is to get 1 million pounds of food and other supplies moving through the pier into Gaza every 2 days. And President Vladimir Putin says Russia is considering sending weapons to adversaries of the West, repeating his warning made a few days ago. He did not say which countries nor entities that he was referring to, and he stressed that Moscow is not doing it right now. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher after a solid jobs report helped quell fears about an economic slowdown that could hurt corporate America, even if it means a potential delay in Federal Reserve rate cuts. The Dow, the S&P, NASDAQ all in the green right now. S&P up 9, gain there of 0.2%. Dow Industrials up 44, a gain of 0.1%. NASDAQ up 18, higher also by 0.1%. 10-year 4.41% with a 2-year at 4.86%. Gold down 2.7%. Today we've got gold dropping $65 the ounce to $23.10, and West Texas Intermediate crude oil up 0.3%, $75.78 a barrel. America's economy added more than 250,000 jobs in May. It was a surprise performance, as we hear from Bloomberg's Vinny Del Giudice.
The addition of 272,000 jobs, plus evidence of faster wage growth, suggests the Federal Reserve won't be cutting interest rates anytime soon. Fed officials meet next week. May's jobs data highlight a labor market that continues to defy expectations, allowing inflation to loom large. And yet there are signs it's taking longer for the unemployed to find jobs. The jobless rate is up, reaching 4%, the highest since early 2022. Vinny Del Giudice, Bloomberg Radio.
DocuSign shares are lower by 4.6%. We've got DocuSign declining after the e-signature company forecast billings for the second quarter that did fall short of the average analyst estimate. Again, DocuSign trading lower now by 4.6%. Recapping jobs Friday, stocks pushing higher, S&P up 8, a gain of 0.1%. Balance of power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you. Welcome to the Friday edition of Balance of Power. It's good to see you here on YouTube, where you can always find us. Search Bloomberg Global News and you'll find our live stream direct from the studios at Bloomberg Radio as we turn to the campaign trail. As Joe Biden enjoys the benefits of incumbency, or at least flexes them on his trip to Normandy, we showed you there his speech a short time ago at Pointe du Hoc, speaking again after the 80th anniversary of D-Day commemorations yesterday. He moves on to the G7, doing things that any other candidate cannot do with the trappings of the White House, simply doing the job, as we've discussed. And we have new numbers today as Donald Trump returns to the campaign trail. He had a big rally last night in Arizona, the first big bash since the conviction, a week exactly to the day before he spoke last night. And we've got new numbers out today from Fox News. Fascinating if we look at the state of Virginia as a microcosm of the nation. And I might be pushing a little bit there, but you've got red and you've got blue. Shows Biden and Trump 48% each in a head-to-head matchup in Virginia. But it's the direction that black voters are turning in that makes the real news here. Donald Trump nearly tripling his share of support among black voters. 9% in 2020 in this poll, 25% today. Let's assemble our panel. Jeannie Shanzano is with us, Bloomberg Politics contributor and senior democracy fellow with the Center for the Study of the Presidency and Congress. Matt Gorman is here too, Republican strategist, executive VP at Targeted Victory. This is a great panel. Welcome to you both. Happy Friday. Great to see you. Jeannie, you're a pollster, and so I don't want to push this too far here. The state of Virginia does not speak for the nation. But to see them each tied here in a state that should be coming a little bit easier to Joe Biden, looking at this massive shift in the black vote, tells you what?
Yeah, and you're doing exactly the right thing in digging down into these demographics because they are fascinating. Virginia, you mentioned the black vote. I would even go out. You look at some of the states they also polled, Nevada, Arizona. You are seeing in those more ethnically diverse states, Donald Trump is hitting over 50%. He is doing better, whereas Joe Biden, for all of his work with Barack Obama, Kamala Harris, attracting the black vote for, many, many years, he is having a tougher time in those more ethnically diverse states, which is ironic. And he's doing not better, but he is holding his own, say, in the more white states like Wisconsin, Michigan, Pennsylvania. So it is fascinating as we look at that. And also, I would point you to the gender gap. Donald Trump still losing amongst women, but Joe Biden having a real problem with men. You couple that with young people and African American or Black men, and it is a real challenge. So Virginia is a critical state to look at. You know, we assume it's a must win for Joe Biden, and it's a win, and it looks like it's going to be an uphill battle once again.
Matt Gorman, do you believe the demographic shift that polls like these are showing, and is it enough for Donald Trump to win?
Yes, and let's be honest, right? If Donald Trump wins Virginia, that's not going to be the 271st electoral vote. There's no real way he, say, wins Virginia but loses Pennsylvania, really, or Wisconsin. This is the cherry on top in a lot of respects. And look, the trends in Virginia are what we're seeing nationally too. African American, specifically African American men, going to Trump in large numbers. And look, you know, David Plouffe, who is Obama's campaign manager, he does a podcast with Kellyanne Conway, and he also raised the alarm about young people. He said, can you imagine 10 years ago saying, you know, do we really want to get young people out? Do we want to have all, you know, Democrats are known for the big voter turnout on college campuses, getting the vote out. They're saying now, like, do we really want to do that? And so you see these demographic shifts. Virginia is a microcosm in a lot of ways, but it's a harbinger of if things are bad in Virginia, they're even worse in Nevada or Wisconsin.
Well, I'm going to flip this whole thing over now and point you to the latest Siena College survey in the New York Times here as a follow-up on a pool that they've been talking to, interviews with nearly 2,000 voters who had previously taken the Siena College poll. And we've talked to Don Levy here before. They do great work in this shop. They found President Biden. They called all these people back and found President Biden gained slightly in the aftermath of Donald Trump's guilty verdicts. The group favored Mr. Trump by 3 points when originally interviewed in April and May. This week, they backed him by only 1 point. This might seem like a blip on the radar, Jeannie, but it's 7%, and that could be enough to change the outcome of this race. What do you think?
It can be. You know, as you mentioned, we'd have to describe this as a modest shift, but it is certainly a bit of positive news for Joe Biden and the Biden campaign. We're really waiting for the, you know, whole group of these battleground polls post-conviction, including Morning Consult and Bloomberg's own swing state poll, to really see if we can find any shifts. But the New York Times Siena poll is a great poll, as is the Fox, as is the Morning Consult Bloomberg. And the numbers slightly better for Joe Biden in the New York Times Siena, but not enough, I think, for them to breathe a big sigh of relief, to be honest. And, you know, since Donald Trump is out on the West Coast, let me just point to the betting markets. They have Donald Trump up 20. Now, I am a pollster. I like to say the polls are much better than the betting markets, but the betting markets are really important too. And so, you know, I think that's where Democrats are right to be nervous about all those groups that Matt was just talking about, young people, African Americans. And again, if I can underscore men, Joe Biden needs to do better with men. That is a big loss for him if Donald Trump is only down 9 in some of these states with women and Joe Biden is losing by almost 20.
We need to do a good segment, a good story on the betting markets, Jeannie. Let's put the polls side by side and actually it's going to be fascinating to track this for the balance of the survey. Matt Gorman, what do you think? You can show me a poll. You could show me 2 or 3 other polls that show no difference, and maybe even Donald Trump gaining ground in the wake of this guilty verdict. Does it move the needle for you in the end?
I mean, let's be honest, right? If Joe Biden can't gain ground when his opponent is convicted of a felony, when can he, right? Like, I would hope that he would gain some ground, but, you know, even what you're seeing, you're right, he's not all of a sudden up 10. You know, he moved the margins a bit. I think, you know, this is kind of tracks with what I said, you know, when I was on your show when the conviction came down, Joe. Like, this isn't going to move the needle writ large one way or another. I candidly am looking towards the debate. And I think if you put truth serum in the Biden campaign's coffee, they would say, you know, the debate is going to be much more important to move people one way or another, shake them off the fence, shake them from RFK Jr. possibly. And I think that's could move people in larger numbers, but it's a risk. It's a risk. Biden, you know, Trump as well. So that's what I would say. If you can't do it when your opponent's convicted of a felony. When can you gain ground?
Little did Matt Gorman know when he joined us in studio a week ago yesterday that he would be the victim of a 2-hour special that included 34 guilty verdicts. That was quite a moment, Matt, and I do appreciate your sharing that with us. And that's the way things go around here. There are no slow days, as I've said. Jeannie, Donald Trump back on the trail in Arizona last night, a big rally. It was the first time he got back on the trail since the verdicts, invoking the word Holocaust to describe the situation at the border, and more specifically referring to reports that the Office of Refugee Resettlement received no response to follow-up calls on about 85,000 migrant children. The children and their sponsors are not required to answer. Health and Human Services says more than 80% of the checkups are successful. But the former president and some Republicans are trying to frame this as 85,000 kids who went missing. I mentioned this, Jeannie, because we just learned that we have a date now for a visit by Benjamin Netanyahu. He's going to be coming to Washington to speak to a joint session of Congress, July 24. He is said to be closer to Donald Trump than Joe Biden. But we hear a reference like this once again to the Holocaust following the Reich post on Truth Social. How do we qualify their relationship with this kind of rhetoric?
Yeah, I mean, I think these are two men who are desperate to hang on to power, who are fearful of what the judicial system in their own countries may do to them if they cannot. And so they find in each other, something that can be helpful to their own personal goals. What I would like to see in the wake of Donald Trump's statements yesterday is some of the outcry that we heard from the Republican leadership in Congress and the GOP concerning issues involving Israel, involving anti-Semitism. I mean, they were attacking students on college campuses who were protesting the war, calling their statements, many of which were anti-Semitic, rightly so. But what about calling out the leader of their own party when he says this kind of thing? Now, that said, I would say this is also an example, Donald Trump pivoting quickly to immigration yesterday. He, too, is looking at that Virginia poll. When they asked people in Virginia, what do you think Donald Trump does best versus Joe Biden? Immigration and the economy were number one. He is desperate not to see that recede from his grasp because Joe Biden did a smart thing the other day, issuing an EO, which was exactly like Donald Trump's from a few years ago. So he doesn't want to lose the issue, hence the inflamed rhetoric. But again, on that issue of the talking about the Holocaust, where are the GOP calling him out on that the way they did these young people, and in many cases, rightly so, on that issue?
Matt, you can take a swing at that if you want, but I'm compelled to ask you, what's going to happen that week that Benjamin Netanyahu comes to Washington? As I mentioned, we have a date, and there's been a back and forth on this for some time here. July 24th, does the Prime Minister seek to sit down with Donald Trump? Does he go to the White House? Does he talk to both of them?
I mean, I think it's a trend we've been seeing in foreign capitals recently. You'll recall David Cameron, who's a foreign secretary in the UK, went down to Mar-a-Lago. I think there's a reckoning and a recognition that, right now, Donald Trump is an even money favorite to be the next president of the United States. And so if you're going to be in power in a foreign capital, you need to have a relationship with these folks. And so, again, Netanyahu and Trump didn't end well, if you'll recall, back in December and January of 2021 or 2020, because Benjamin Netanyahu recognized Biden as the duly elected president. So there are some patching up to do. I am merely curious, number one, how much do Republicans lean in on Israel as an issue the week before the Republican convention? Do they lean in on that? And how does that kind of relate? Because the first week back. And I think coming back to immigration, I think the challenge is, look, I went down to the border with Tim Scott myself when I was working for his presidential campaign last year. I saw the issues, and I saw how, the Overton window has shifted. We saw back in the day, we've been doing this for a long time, always when you talked about border security, you needed to talk about, legal status or citizenship for people here legally. Right. The window has shifted. You don't need to talk about that anymore. It is purely border security focused, shows that this issue's evolved. The trick is, how do you keep it salient without giving grist for the Democrats to go back on offense?
Some big questions here that are going to take some time to answer. That's why we have our great panel, Matt Gorman and Jeannie Shanzano. We can do anything. And they'll be back in our second hour as we take a closer look at Joe Biden's trip abroad and his speech today at Normandy, the follow-up to what we saw on the 80th anniversary of D-Day. It's coming up next, only on Bloomberg.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
The job market stays hot, but where's it going? Welcome to the fastest show in politics. With payrolls data out today, renewing the debate over interest rates. I'm Joe Matthew in Washington. Thanks for joining us on Bloomberg TV and radio. Coming up, our conversation with the Acting Labor Secretary, Julie Su, and insights on the data from labor economist Catherine Edwards at RAND. It's all after a look at Wall Street. We start right there, right now on the markets with Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. And right now we are looking at the Dow Jones Industrial Average. It's been a volatile day. We do have the Dow moving lower now, down 16 points. Actually, the Dow, higher by 82, up 0.2%. The S&P 500 index up 16, up 0.3. NASDAQ up 48, gain there of 0.3%. So stocks solidly in the green. The Dow, the S&P, NASDAQ, all advancing right now, and to be sure, the Russell 2000 is lower by just about 0.8%. 10-year 4.41%, with a 2-year that's now yielding 4.86%. Spot gold today trading lower by 2.7%, 23.11 the ounce on the precious metal, and West Texas Intermediate crude up 0.2%, 75.69 for a barrel of WTI. So to be clear, Jobs Friday, the Dow, the S&P, NASDAQ very much in the green right now. S&P advancing by just about 0.3%. GameStop trading again after a lot of drama as Roaring Kitty makes his return to YouTube. GameStop shares after a trading halt right now down by 35.3%. Also keeping an eye on Vail Resorts, looking at a downward slope there for the ski operator. Right now, Mountain MTN on the ticker there. Vail Resorts trading lower by 12% after earnings. So again, recapping, the Dow, the S&P, NASDAQ solidly in the green. S&P up 13, up by about 0.3%. Balance of power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Charlie Pellet, thank you on this Jobs Day. With the reaction on Wall Street, fascinating since 8:30 this morning to listen to the analysis and the different takes on the same numbers here. Growth surging in May. You've been hearing about that if you've been with us since 8:30 this morning. Wages accelerating, 272,000 the number last month, blowing the doors off expectations once again. The unemployment rate, though, also up, hitting 4% from 3.9, just a tick, but not expected. And it brings us to the question of which survey we should be looking at. Bloomberg Economics would point you to the household survey. That includes agriculture, that which generates the unemployment rate. Payrolls stay hot, though, and that's the number the White House is going to seize on here. So we made our way down to the Labor Department to get the take of the acting secretary, Julie Su. And I started by asking her, as we got together on the patio of the Labor Department, overlooking the U.S. Capitol, which survey better reflects reality? Here's what she said.
This is another very strong jobs report. I'm not going to get tired of coming here and telling you that we are continuing to experience very strong, stable, and steady growth. So it's 272,000 jobs created last month. The unemployment rate has remained at or below 4% for 30 months straight. That's still the longest since the 1960s. And at the same time, real wages, over the year are up 4.1%. So workers are doing better in an economy in which the president has said, when we focus on workers and worker well-being, we're going to do what's right for the economy and for the country.
When you look under the hood, you find that 400,000, even more than 400,000 people left the labor force in May. The participation rate is not back where it was before COVID right now. How do you explain that?
Well, so let's say, the prime age labor force participation rate remains very, very strong. And it's worth noting that, again, women's labor force participation rate hit another historic high. So last month we said it was the highest since 1948 when this data was begun to be collected. It's now a little bit higher than that even. So women continue to power our economic recovery. At the same time, we are seeing, again, strong participation. People are in the job market. People have come off the sidelines. People are looking for jobs, and they're finding them. Where there has been a little bit of a very small uptick in the unemployment rate, again, still at or below 4% for the longest stretch in decades, but has to do with young people ages 20 to 24 who are in a bit of transition, really, if we think about May, right? May is a period of transition for all of us parents with kids who graduate and maybe move and, are looking for different jobs during that time.
You can tell a great story and put a great headline number on that unemployment story, as you are right now. But when you look under the hood, you do see some elements of weakness compared to the payroll survey. And I wonder, while you're happy where it is now, if you worry about where we're going to be 6 months from now, if this is a slowing job market.
Well, the payroll survey really is the gold standard when it comes to the unemployment rate, right? This is the, it's the largest by far of any data set, including the household survey, that is used. And so, again, I don't think there's any way to paint this as other than continued strong, stable, and steady growth under President Biden's leadership, and proof of his theory that if we invest in America, we can create good jobs in communities and, crowd in private investment in order to do that. And as I travel the country, I'm seeing the benefits of that.
We've talked a lot about the impact that immigration has on our job market. It can be for better or worse, depending on the trend that you're looking at. And there's an analysis from Steve Englander at Standard Chartered Bank that we looked at this week that estimates about half of the job growth since October can be attributed to undocumented migrants, that it's somewhere in the area of 109,000 a month. If the president's executive order put in place just days ago lowers the threshold, lowers the numbers of undocumented immigrants entering the country, what does that mean for the job market? Do you see numbers like that in your modeling?
I mean, I haven't seen that study. I would actually question those numbers based on what we see. Right? This is a situation where, one, we're not talking about dividing a small pie into smaller pieces. We're talking about a much bigger pie overall. So more jobs, more people in the labor market, more opportunity for all. Since the president came into office, again, we've talked about this, about 15 million jobs created. That is 15 million families, 15 million individuals who are having the benefits of a good job that might not have had that before. I would also say that it is true that there has been, immigration-based growth also, and that has been true throughout our nation's history, right? That immigrants have helped to do jobs and help fuel the economy, but the majority of this job growth that we're talking about has gone to native-born workers.
Well, talk to me about the other side of this story, and that's immigration reform. H-1B, H-2B. We spend all day talking about border security in Washington. What does our job market need in terms of attracting talent from other countries legally?
I mean, it's such an important question, right? This is why, since day one, President Biden has called for the kind of comprehensive immigration reform that would address, some of the challenges that our system has created.
What would our job market look like with that help?
What would our job market look like with
if you got that reform?
Right. Well, so we do we have in this administration increased the number of H-2B workers that have come in. We recently did a rule around H-2A workers, making sure that when migrant workers come to this country through legal means, that they're also protected, right? That they are protected for their own good, but also so that their being here doesn't take away from the good wages in those industries. So we, but the bigger picture is that there does need to be comprehensive reform. The president has called for that, and frankly, Congress needs to do its job.
There's something that I don't want to get too deep in the weeds called the birth-death model that our analysts at Bloomberg Economics are looking at that would suggest some of the companies that we've seen closing might not be reflected yet in the numbers that we saw in this monthly survey. Based on layoff announcements, corporate closures, where do we look in the middle of summer when these numbers start to emerge?
Well, we will come out every month to report the data that we have, but everything that we have seen this past month, this past year, as well as, the last year since President Biden came into office is historic job growth. More jobs created during the same time period than any president in our history, and continued low levels of unemployment. Again, historic lows, and more opportunity to come, right? The investments in the president's Investing in America agenda, many of them are still coming out. And that's why this summer I'm going across the country talking about Good Job Summer and focusing on the importance of what a good job does for families.
The Good Job Principles Summer Tour. You're like Beyonce. You're launching a national tour, and it's not a mistake. I see some of the states you're going to, like Pennsylvania and Michigan. What is your message to voters in those states?
Well, my message to working people is that we see you, we have your back, we know that you have talent and desire, and we want to create the kinds of opportunities that will allow working people to have a good job where they can be paid a living wage and live a secure life. And our message generally is that when you build a workforce that is ready, that is trained, that is skilled, that pulls the full talent of the American people, it's good for employers, it's good for our economy, and we see that time and time again in these jobs numbers.
Yeah. Getting back to the household survey, which is important to us and our viewers and listeners, the fact that it reflects agriculture, the fact that it reflects what's happening in people's households, does that not raise the level of importance of the household survey at this point when we look at that against payrolls to get a sense of not even as much where we are now, but where we're going?
I mean, I think the bigger, the answer is the payroll survey is the survey that tells us how many jobs have been created, what industries they've been created in. And again, the growth we're talking about is not just single industry, right? It has been for the entire time, but certainly this last month is no different, very, very broad-based. We saw growth in leisure and hospitality. We saw it in construction. We saw it in professional services. We saw it in healthcare. And so, there's really, the numbers don't lie. It's really, a broad-based, solid, continued growth. And I think that coveted soft landing that so many people bet against.
My conversation with Julie Su, the acting Secretary of Labor, a short time ago, was her first conversation coming off the data, actually. Really interesting to hear the way she framed some of the messaging coming out of the administration here. We're going to get a different side of this now with Catherine Edwards. I've been looking forward to this conversation with us today at the table. Economic policy consultant, adjunct economist at the Rand Corporation, also writes for Bloomberg Opinion. So that means, Catherine, you get to say whatever you want. I can only imagine what it's like to be you. Soft landing is what the acting labor secretary said, and we've been asking her that is this it? She seems to be saying it out loud now. You know what? This is it. What comes after a soft landing? Or, in your view, are we going into a recession?
I looked at the jobs report this morning and couldn't help but think that we are on borrowed time. I don't know how much longer the labor market can stay strong with interest rates at the level that they're at now and just the amount of pressure that most families are under to make ends meet.
Prices have you concerned? What part of the economy? Because we see some areas of worry in the household survey versus the establishment survey, which is where I started with her. They want to talk about a big payrolls number, but you see a lot of other evidence under the hood.
I mean, I think what I'm worried about most is just on some level, the dissatisfaction that Americans are expressing with their current economic situation, the amount of price increases that they've had to bear over the past 2.5 years, but at the same time, the lack of relief for any of those price increases. Policy geared towards making it easier for families to get by. I mean, none of that's allowed right now because we have to wait for prices to come down on their own through falling consumer demand. So that means we don't really get to help consumers at all. I don't know how much longer that can last.
Well, then you wake up on a morning like this and you hear that expectations of an interest rate cut have been pushed back and maybe nothing at all this year, even as President Biden predicts one. What do you make of that? Do you think it's true?
I mean, you have better people to forecast what the Fed will do than me. I prefer to look at the labor market than the people down the street. But, I do wonder, we know what needs to happen for the Fed to cut rates because they think inflation has cooled sufficiently, right? We have all the little ducks that have to come into a row and we get one kind of price report or one kind of jobs report. It either gets too bad in the labor market or we get good news from prices and then they're going to drop rates. And we are all waiting for that to happen have been for some time. I think what is not clear to me is when does the Fed admit that maybe this policy isn't going to do anything else? That we are at the limit of what it can accomplish. Even Dallas President Logan said it's not clear it's going to do anything else. Now, she was very careful to say that doesn't mean she thinks that rates should be cut. But, when you're living in a moment real time, you don't have the ability to step back and say, are interest rates the best thing that we can do or the only thing that we can do to move the economy from basically this what we think is a soft landing where we've been for 6 months.
Well, what do you do coming out of clearly still noise from a pandemic? How do you get to the supply side if that's where you're going?
I think that expansion of the labor market is good at keeping certain prices low because we don't have to have wages be bid up too quickly, and increasing labor supply is going to be challenging when the largest generation is retiring. And we're coming off of a period of restricted immigration. But at the same time, the U.S. has never pursued an active labor supply policy. It's not as if Congress has ever sat down and said, how do we maximize the number of workers in the United States today?
Well, there's a big argument about the impact of immigration. It's been going on for a long time. It gets louder with new research from Standard Charter that you may have seen. And the numbers were remarkable, if true, that undocumented migrants made up for half the job growth in this country since October, that we could be looking at as many as 100 to 109,000 jobs a month, distorting payrolls. Do you see that falling? First of all, do you believe that? And if you do you see that falling in the wake of this executive order from the president?
I hadn't seen it, but it doesn't necessarily surprise me. Immigration is a very big part of our labor market. Around 1 in 5 people who live in this country were not born here, and we tend to treat them as almost a separate segment that aren't as good or maybe aren't as important to labor market policy as native-born workers, but they are here and they are working, and to act as if they need a separate policy as opposed to are integrated into our labor markets, is really putting a demographic imposition on something the labor market wouldn't make a distinction between.
Interesting. But if that is qualified here in the next couple of months, the Biden administration is acting to shrink the labor pool, you could say then, yes?
No and yes. I mean, because
indirectly,
the basis of the U.S. economy is that we have more people basically every month than we do the month before, and that the population is growing, and that the immigration is just a thumb on the scale, right? To change that growth, be higher or faster, or slower or faster. But no, I don't think it's necessarily good policy. I mean, similar to how I didn't think it was good policy to let child care subsidies expire when we knew that it was risking pushing more women out of the labor force. And we haven't seen that happen to the degree that it was predicted, but it's certainly not helping the U.S. workforce that child care costs families, on average, a quarter of their income.
Yeah. It's interesting. You remember this exchange between Elizabeth Warren and Jay Powell in one of their many standoffs in congressional hearings. We tune in just for these moments sometimes. And she was making the point that you keep hiking interest rates, you keep them higher for longer, you're going to destroy the job market. And he clapped back and said, what is better, to allow inflation to run out of control so families can afford nothing? What do you make of the balance that he's trying to find here?
All policies have trade-offs. That is the reality. There's never one winner of all we have to do is this and everything is okay and it doesn't have any consequences. There's always a trade-off to consider. And Powell's job is not to consider the trade-off for how Americans feel about economy and society, whether or not they think that their struggles are important to their government. And that is Warren's job, and that is elected officials' job. I mean,
well, it's also a Fed's job with a dual mandate, you could argue.
I mean, are they equal mandates?
Tell me.
I don't know. We have had unemployment below 4% for just over 2 years, ending this month, and that's the second time it's happened in almost 100 years. So it feels like maybe it's not quite equal of a mandate. I think there's a policy question that is very much, I write it down on a two-dimensional graph. Prices are going one way, the labor market is going one way, and here's my interest rate policy, and I just let it happen. But the world in which this takes place is a world in which families are struggling, and they hear news every day that corporations are not. Right? That we have record profits happening for companies, and that we all have to make sacrifices for the economy if you're a family, if you're a worker, if you're trying to buy a gallon of milk, but we don't see the Fortune 500 companies making those same sacrifices. Right. And, who builds economic recovery and who bears economic pain? Those are still...
Appreciate your view. Catherine, thank you for joining. Catherine Edwards from RAND, only on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. GameStop back up and running after a trading halt, and the stock now lower by 38%. The highly anticipated return of Keith Gill to YouTube failed to immediately deliver a boost to GameStop after the retailer unexpectedly released earnings, and a plan to sell up to 75 million additional shares sent the stock tumbling in the hours before the live stream report. But right now we do have GameStop shares once again trading now lower by 37.6%. Jobs Friday, and we've got stocks higher after a solid report this morning helped quell fears about an economic slowdown that could hurt corporate America, even if that means a potential delay in Federal Reserve rate cuts. Right now, the S&P is up 16, up 0.3%. Dow Industrials up 84, up 0.2%. NASDAQ higher now by 39 for the NASDAQ Composite Index, a gain right now of about 0.2%. 10-year 4.42%, with a 2-year that's yielding 4.86%. Spot gold down 2.8%, lower by $68 the ounce. 2309. Going to be very interesting to see how gold finally closes today. Will it be above? Will it hold above 2300? 2309 right now on gold. Crude, West Texas Intermediate up 0.2%, 75.69 a barrel. GameStop again down 36% right now. S&P up 18, up 0.3. Balance of Power continues now. Back we go to Washington once again. Your host, here he is, Joe Matthew.
Charlie Pellet, thank you so much, sir. Happy Friday and welcome to the threshold of the weekend, the Friday edition of Balance of Power on Bloomberg TV and radio, with our eyes still on Normandy. A day after we mark the 80th anniversary of the D-Day invasion, President Biden was back today at Pointe du Hoc, the same spot, as I read, on the terminal, etched in the nation's political memory in 1984. That's when Ronald Reagan stood in that same spot delivering his famous Boys of Pointe du Hoc speech, drawing common cause between their feet in the face of Nazi Germany's tyranny, to then the Cold War, and now today Joe Biden connecting the dots to aggression from Vladimir Putin, referring as well to Donald Trump without mentioning his name over the past 2 days. We assemble our panel for their take on this. Jeannie Shanzino is with us, Bloomberg Politics contributor, of course, senior democracy fellow at the Center for the Study of the Presidency and Congress. Matt Gorman is here too, Republican strategist and executive VP at Targeted Victory. Great to have you both here. Matt, what's it like as a Republican to hear the Democratic president channel the former Republican president Ronald Reagan, who so many Republicans cite in their arguments and their justifications for policies? A lot of folks have seen the Republican Party move away from that establishment view to one closer to isolationism. What did you make of Joe Biden's speech today?
Couple things. I don't think it was a very smart political ploy to raise expectations galactically before the speech and say that your speech today will evoke comparisons of, I believe, one of the greatest speeches of one of the greatest communicators we've ever had in the presidency. I think it did Biden a disservice to raise the bar that high. Number one. Number two, look, I revere Reagan. I do. I think he was one of the greatest presidents, especially the 20th century. But I think what's tough, and we talked about this earlier, when you're trying to appeal to younger voters, invoking a president who gave a speech that is further away from present day than when he gave it to D-Day. It was a long time ago, and so it's tough to resonate when you're comparing yourself to a figure that many folks don't have that historical touch point for.
Boy, that's incredible. Great perspective on the timeline there, Jeannie. We talked about this a bit yesterday. There was more, of course, than Ronald Reagan. You might have seen this, by the way, or heard this as a very different speech. Was the White House correct to kind of frame it that way to begin with, to Matt's point, raise expectations?
No, absolutely not. Listen, Joe, I may want to, repeat Mary Lou Retton's Vault or something, but, well, I couldn't do it either way. But why would you set yourself up for that? Listen, Ronald Reagan's speech was given at a particular place in a particular time, and it was such a different media environment that a speech like that could raise your numbers and help you win the presidency again, as it did with Ronald Reagan. But we're in a very different media environment, and you don't want to set yourself up for a repeat because, of course, all you can do is fall short in people's eyes. Was it a good speech? Absolutely. It was fine. The message is right. The time is incredibly different. So for that reason, I think, the White House, I'm a bit surprised. I think some of the speechwriters are so keen on getting their important words heard that they raise these expectations, but it's problematic. The reality is, if Joe Biden wants to win this election, he's going to have to return to the issues people care about. He is trying. This is an important issue. Democracy around the world is under attack. We've known that for 2 decades. He's trying to make that case. But what is it at home? It's all about the economy. It's all about inflation. The things you just talked to Julie Sue about, that's what it's about. And he's going to have to return here to win the election. So good speech, absolutely. Is it going to change the ball game? Absolutely not.
Well, I don't know, Matt. I think that moment when he put the aviators on while he was still at the podium before walking away might have done more for young people than the words that he delivered in some cases. But how about the actions made? $225 million in aid announced for Ukraine in a bilateral meeting with President Zelensky. They appeared together. They got the footage of them talking and meeting. Joe Biden even apologized to him for the delay in funding. Is that closer to what the commander-in-chief should be doing here as he's running for re-election?
In theory, yes. I mean, look, he is governing right now, and look, there is certainly parts of the Republican base that do not want Ukraine funding. The worldview is very different, but also it is broadly popular with independents and a large segment of Republicans. My old boss, Tim Scott, was supportive of funding for Ukraine in order to degrade the Russian military. And look, I will say, in his interview yesterday with David Muir of ABC News, Biden did make a good point. He did point out how much the Russian military has been degraded and the casualties suffered upon the Russian military. But I will say, I think to Jeannie's point, Ukraine and democracy writ large will not be winning issues for Biden in this election. If he wins this election, it's going to be because he was able to find a message on the economy and that abortion was able to at least match the salience that immigration does as a single issue motivating kind of point for voters. That's, I think, it's going to come down to at the end of the day.
It's interesting that we're still talking about money for Ukraine, Jeannie, after this massive supplemental request was passed. The president signed it into law. This $225 million shipment is actually a drawdown on U.S. supplies. As Ukraine waits for help here, it's going to take a long time to get some of that material to Ukraine. The meeting today important in helping that happen. Our European allies are also taking part in this now, and we're allowing Ukraine to use U.S.-made weapons, at least in some cases, near Kharkiv across the border against Russia. How long do you give the administration to widen that scope, even as they had warned over escalating this conflict with Russia?
Yeah, it seems to be a pattern with this war for the last 3 years that there is an ask, there is a time, and then there is an approval. I think the real challenge here for the White House and for all of us, quite frankly, and for Ukraine, is it is still very unclear, at least in my mind, what is the end game here? What is success? How do you define that? And of course, Zelensky defines it in one way that the White House, at least heretofore, has not approved or agreed with. And until we know what the end game is, we are down a path where this thing is just going to stretch out. So Joe Biden may revisit allowing, U.S. Arms to be used in Russia in a more concerted way. But is that going to make a difference? I don't think so. And I think as it pertains to this issue at home, the Biden team is better off, leaving this to people like McConnell and Sullivan. The Republicans in the Senate did approve finally the spending, and we saw McConnell's editorial. I think that does more to speak to these middle, moderate, swing Republican voters who aren't that excited about Donald Trump in general, but specifically foreign policy wise and the isolationism, to bring them over. And so the Biden team has tried to reach out, and they continue to do that, but they're far better having Republicans reach out to Republicans than trying to have Joe Biden over there doing it. And I'm not saying that was the intent of the speech, but from a domestic standpoint, it's not going to have a lot of impact, within 24, 48 hours from where we are now.
Matt, the Daily Mail is reporting that, of all people, Steven Spielberg, who we saw in the crowd yesterday at the Normandy commemoration, helped to prepare Joe Biden for his speech today at Pointe du Hoc. He was in the room at the Hotel Intercontinental in Paris on Friday morning when the president was doing his final run through doing prep here for the speech on democracy. The White House did not apparently respond to inquiries about this, but what does that tell you about the optics the president's trying to employ here?
There's always this fascination, mutual fascination, Hollywood with politics, politics with Hollywood. Biden has done this before. He's brought in John Meacham to kind of ghostwrite, if you will, or at least advise a lot of his speeches. Look, I love, what Steven Spielberg did with Saving Private Ryan, producing Band of Brothers. He does bring a unique perspective to this, but I'm also, he's not much of a writer. So he's a director, so he can maybe advise in the cinematography, if you will, the scene that they're going to set. But at the end of the day, it doesn't really, I don't think, add much value to what Biden is doing. He's going to have to go up there and perform like he did today.
It's great to have both of you with us. A great panel on a Friday. Jeannie Shanzano, of course, Bloomberg Politics contributor, and Republican strategist Matt Gorman from Targeted Victory. We thank you both. Have a great weekend. We'll pull them back together again on Monday here on the fastest show in politics. Coming up, our conversation with David Weston, the host, of course, of Bloomberg Wall Street Week, after we get an update on world and national news. Amy Morris has that in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. The prosecution rested its case against the president's son, Hunter Biden. He's accused of lying on a federal gun purchase form when he said he was not using drugs at the time that he bought a revolver in 2018. Prosecutors say Hunter Biden was actively using drugs and that he lied on that form. They even called his ex-wife and a former girlfriend to testify that his drug use was habitual. Attention now shifts to lawyers for the defense team and whether they'll call Hunter Biden himself to testify. President Biden is apologizing to Ukraine President Volodymyr Zelensky for the 6-month delay in military aid. With that apology, about $225 million, part of the $61 billion that was held up by political fighting in Congress. That allowed Russia to make gains on the battlefield. Volodymyr Zelensky was grateful to have his military revitalized and says he hopes an end to the war comes soon.
I hope that it will be a first step on this way to peace. We need peace in Ukraine.
The funding will be used to restore the country's damaged power grid. The U.S. has reestablished a temporary aid relief pier to get deliveries into Gaza. That pier was damaged by storms and high seas about a week after deliveries first started. Central Command says they'll ramp up operations soon. They want to get about 1 million pounds of food every couple of days into Gaza. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Wall Street, we do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all pushing higher. S&P very close to session highs. Stocks are climbing as that solid jobs report this morning boosts the earnings outlook. S&P up 14, gain right now of 0.3%. Dow Industrials up 75, up 0.2. NASDAQ up 33, up 0.2. 10-year 4.41%, 2-year 4.86%. GameStop up and running, stock lower by 39%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you, and welcome to the Friday edition of Balance of Power. It's good to have you on Bloomberg TV and radio. I'm Joe Matthew in Washington as we digest the data. It's Jobs Day here, of course. As Charlie reminds us, the market's reacting to what you could look at as a mixed report. We talked to Molly Smith about it. We talked to the acting labor secretary about it. What should we be looking at? The jump in payrolls hotter than expected, or signs of deterioration possibly in the household survey? Not that that's a new question. Just ask David Weston, the host of Bloomberg Wall Street Week, and our colleague in New York is with us right now. The everlasting question, David, I won't ask you about 2%, but I wonder which has your attention today.
Well, I must say, politically, as I looked at those numbers, which actually did surprise me a bit, I think President Biden keeps getting the right answer to the wrong question. In the sense that, boy, people are getting jobs, which has got to be good. Wages are going up, which has got to be good, right? The economy's really strong, which has got to be good. But people are concerned about inflation, how much they're paying for things. And this doesn't help them on that score at all. I feel a little badly for them because I say these should be good answers, but I'm not sure they're answers to what people are really pressing about right now.
Yeah, and it's easy to write a statement, I suppose, if you're in the White House communications office talking about a stronger than expected jobs market. Just keep beating the drum, but the investment community, the markets look at this a lot differently. Are we wiping out chances for a rate cut this year?
Well, I don't know about wiping out. I mean, there are some who have been skeptical all around. Certainly reducing chances and reducing the number of rate cuts. And again, coming back to the political side of it, which is your bailiwick, Joe. I mean, if people are trying to get relief from higher interest rates, these numbers don't particularly point in that direction. I mean, it's not only that they're paying more at the pump and paying more for groceries, but also they're paying more on their mortgages. And by the way, on credit card debt and auto debt and things like that, that a lot of working Americans are feeling day in and day out.
We got an interesting conversation today that we're going to bring to our listeners and viewers now with a prominent voice in the financial markets and his view on this economy today, David.
Yeah, Scott Bessent, who actually was Soros' chief investment officer at one point. Scott Bessent has got his own fund now. He's got his own company, but he's talked about a fair amount because he's a smart man. He knows things. But also, he talks to Donald Trump quite frequently. And his name has been kicked around, as you know, Joe, well, as a possible Treasury Secretary. Who knows whether that might come to pass or not. But people are paying a lot of attention to Scott Bessent right now, Joe.
Yeah, it's interesting. We talk about a short list for a lot of things for a potential Trump administration, but it's hard to pinpoint the Trump economic philosophy. David, outside of, well, I guess tariffs and making permanent the 2017 tax cuts, what else is there?
Yeah, I think also it's fair to say, and Scott Bessent does talk about this, that President Trump, former President Trump, maybe future President Trump, doesn't like regulation much. You remember when he was president the first time?
Yes.
He had that rule about taking away more regulations than you put in. And he's been pretty outspoken on that front, which I think you could expect. He also tends to like a weaker dollar and lower interest rates. That's been his pattern in the past. Some people say it might have to do with his background as a prominent real estate developer, which is pretty common there. But you're right, Joe. The question is, how do we anticipate what's coming around this time? I think it's fair to say from stuff you and I have both seen, Joe, that in fact, this Donald Trump has done a lot more work, or at least had people around him do a lot more work on their plans than the first time. There have been people working on these things, and they have some ideas, I think.
So we did walk us into this conversation.
Yeah, sure. Well, we did get to talk to Scott Bessent earlier today, and this is basically what he had to say. He started out with sort of a zinger about Bidenomics.
Maybe a better alternative name is Bidenitis. You know, it's like an acute disease. You never know when it's going to be fatal. But look, Bidenomics is a return to central planning that was discredited in the 60s and 70s. We got the same kind of inflation through that. And I think that it depends on this incredible level of government spending, state intervention, and kind of a disregard for markets. It's going to be the opposite of what Trump 1.0 was, which was private sector solutions. The other thing that is part of Bidenomics is you have this massive wave of government spending, but it's met by increased regulation, so you're constricting the supply side, and that's why you get inflation.
On the spending side, there's a lot of talk about the growth of government and objections to the growth of government. At the same time, you may know Rashir Sharma has actually been writing on this subject saying, you know what, it has ever been thus, at least in modern history. Even the days of Ronald Reagan, President Ronald Reagan, the government actually didn't shrink at all. It continued to grow during that period of time. Do you take issue with that? Do you think there was a time when the government actually was smaller and we had the results of it?
Well, David, I'm actually not an economist. I'm an economic historian, so I am boring enough that I could quote the size of government all the way back to Alexander Hamilton. So there was a time when the government was smaller, and with good reason. A lot of the programs have been increased, but traditionally, in terms of revenues, tax intake as a percent of GDP in modern times, we've averaged about 17 to 19.5% of GDP. And I think that's a pretty good baseline level. But what's worrying here are the size of the deficits, which are being driven by spending. And I think that somehow this Biden promise that we will do better in 2025 is pretty disingenuous. That you spent 3-4 years spend, and then now there's no choice but to increase taxes. And I don't think they're going to cut back on spending, but in their 10-year projection, the only thing they do want to cut back on is defense spending. There's a 21% decrease in defense spending, which I find alarming, given the international environment that this administration's created, given what any administration, Democrat or Republican, is faced with the challenge of China, Russia, Iran, North Korea. Now Venezuela is getting in on the act. So I think the decreasing defense spending is just the wrong way to go. And I would note that because of these blowout deficits, the inflation and the high interest rates, this will be the first year that interest service on the debt is higher than defense spending. And that tells me that this high debt is a national security issue.
As you say, Scott, we have something around almost a constant 17% of GDP actually in receipts. At the same time, expenditures, even during Ronald Reagan, there were 20%. They went up actually to 23 or 24%. They came back down close to 20%. The only time it's gone down as a percent of GDP was actually during Clinton. What do you think is a realistic number for a Trump 2.0? If President Trump gets elected again, what do you think is a realistic number for government expenditure as a percentage of GDP?
Look, I think we got to stay right in that 17.5 to 19% range, and I'm a big believer that for Trump 2.0 that we can control spending by freezing the discretionary component, except for defense, and moving toward a 3% deficit by 2028. I think that would be music to the market's ears. I think the debt market would respond to that. I think rates would go down. I think inflation would go down. So there's a chance here for a self-reinforcing cycle.
You mentioned regulation as being the other force that we'll have to contend with, and obviously President Trump does not like regulation. You have said we should have less regulation. But let me ask you about one specific form of regulation. That's antitrust regulation, because you've also expressed concerns about incumbency, as it's called. And we do have growing concentration, pretty much as I understand it, through the U.S. economy. Isn't antitrust a useful mechanism, and is it something that perhaps President Trump, a second President Trump, would use to try to reduce concentration, which, after all, would likely reduce costs?
Well, look, I think antitrust is a last resort. I think the real problem is we have too many barriers to entry. So once you cut regulation and there's more local finance available, I'm a big proponent of local and community banks, and Main Street can flourish, along with Wall Street. And what really drives Main Street are these local banking institutions. But I think once you cut regulation, then you get more entrance into the economy. And I think the antitrust is a final solution. It's the draconian solution because you have priced out the startups. In my hometown of Charleston, South Carolina, we have a couple of new startup airlines, and the rates, the prices are low, the destinations are new, and it's pretty exciting.
Scott, let's talk about the Fed independence, something that's really gotten talked about a lot. I know from talking to you before, you have some question about how independent the Fed is right now. But to President Trump, if he returns, how important would Fed independence be? Or is it important to him at all? Should it be important?
So, look, Fed independence is always important. And I think the original sin here with the Biden administration that set off this great inflation was politicizing the Fed. So Jay Powell's appointment was the latest appointment this century for a Fed chair. They did not announce his reappointment until November 2021, when in August of 2021, if you go back and read the notes of the Jackson Hole meeting, his speech, he clearly knew that inflation was on the rise. He expressed concern about inflationary pressures, but because President Biden did not announce his reappointment until January, he was reluctant to do anything. And then, the first hike wasn't until March. So, look, Fed independence is very important. I think it's a personnel issue. I think Donald Trump is always going to make his opinion known. And I will note, in hindsight, when he was complaining about the high rates in December of 2018 and that Jay Powell was making a mistake raising rates, that he did a final rate hike in December, crashed the markets. John Williams had to come out, the head of the New York Fed had to come out the next day and calm things down. And then within several months, there were 3 rate cuts after that. Fall of 2019, when Donald Trump was complaining about high rates, we had the repo market blow out, and the Fed had to put in a standing repo facility. So, President Biden mentioned rate cuts in the State of the Union. He's mentioned them twice since then. So, jawboning is fine. Senator Warren likes to jawbone, and I think it's her right to talk about lower rates. And I think as long as it's in a public forum, that it's healthy.
And finally, Scott, you mentioned personnel are really important. Let's talk about personnel. Your name has been mentioned as a possible Treasury Secretary. You said you have a full-time job, I know, although I don't think you've said you wouldn't take it. But apart from individuals, in talking with President Trump, advising President Trump, what sorts of people would you advise he attract for his economic team? And how important is it to send reassurance to the markets?
Well, I'll take the last question first. Reassurance to the market is going to be very important. And I think that he would like to contrast with the Biden cabinet, because if you look at the Biden cabinet now, even the head of the Small Business Administration, I think, has been mostly in government work, for the past decade or so. The Biden cabinet is lawyers, it's politicians, it's regulators, it's full-time government people. Like there's a saying that they've never signed the front of the paycheck. I would say they've probably never gotten a paycheck. That they've been in big government, and they just get it through direct deposit. So I think a much better blend of private sector expertise coupled with people who have experience in government would be an ideal cabinet.
Fascinating conversation with Scott Bessent, the CEO, Chief Investment Officer at Keyscore Capital Management, talking with Bloomberg's David Weston, who you can watch a little bit later on and listen to here on Bloomberg TV and radio on Bloomberg Wall Street Week. That's 6 p.m. Washington time. We're going to continue our conversation about today's jobs data in the late edition of Balance of Power. That starts at 5 o'clock Washington time. Heather Boucher of the White House Council of Economic Advisors will be with us. Up next, it's Bloomberg Business Week with Tim Stenivek and Emily Grafeo today as we work our way into the weekend. Thanks for being with us and spending some time with us. Don't forget to subscribe to the podcast here on Balance of Power, the fastest show in politics. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Very good afternoon on this Jobs Friday, everyone. Live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is Bloomberg Business Week. I'm Tim Stenivek, along with Bloomberg News cross-asset reporter Emily Grafeo, who's in for Carol Masser on this Jobs Friday. Emily, thanks for joining us. How are you?
Thank you for having me.
Yeah, good to have you with us. Hey, like I said, Jobs, jobs, jobs. That is what everybody's talking about. The quote-unquote Fed-unfriendly payrolls report heard around the street. Non-farm payrolls advancing 272,000 last month, beating all projections in a Bloomberg survey economists. That is up ahead. Stocks higher, but the bond market getting hammered after that hotter-than-expected jobs report. We've got a great roundtable on the rates reset, what it means for the Fed meeting next week, and what it means for the equity trade.
And the view of the jobs market when it comes to one of the world's largest temporary staffing agencies. We check in with a senior vice president over at Adecco.
Okay, everybody's talking about this on Twitter, so we got to hit it a little bit. GameStop shares, they are tumbling further today during the highly anticipated return of Keith Gill, a.k.a. Roaring Kitty. He went back to YouTube. There's also some fundamental news driving the stock lower, though, and we're going to discuss that.
And one more thing, we'll tell you about the best thing to do in the Hamptons this summer.
All that and more over the next hour on Bloomberg Business Week. First up, though, a check on the day's trade and top business stories. Here's Charlie Pellet.
Hi, thank you very much. Jobs Friday. We love it here at Bloomberg. The Dow, the S&P, NASDAQ, very much in the green right now. 7-point advance on the S&P, 5360, up right now by about 0.1%. We got the Dow up 42 now, up 0.1%. NASDAQ a little changed, up right now by just about 2 points. We are on track for a winning week for the S&P 500 index. 10-year yield 4.42% with the 2-year yielding 4.87%. Spot gold hit hard today, down 2.9%, tumbling $69 the ounce to $23.06. And West Texas Intermediate crude up 0.1%, 75.64 right now for a barrel of WTI. Bottom line here, stocks higher after that solid jobs report helped quell fears about an economic slowdown that could hurt corporate America, even if that means a potential delay in Federal Reserve rate cuts. Our Michael McKee's going to have a whole lot more on the jobs report and the Fed coming up in just a moment. Cannot ignore GameStop. Roaring Kitty is back, but the stock is tumbling. GameStop now lower by 40%. Also, the video game retailer unexpectedly releasing earnings and a plan to sell up to 75 million additional shares earlier in the day. AMC Entertainment, by the way, now lower by 14.3%. Recapping, NASDAQ just turning negative, down 4 points. S&P up 6, a gain there of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. I certainly do appreciate it. Well, again, back to our top story on the day today, that payrolls report that pretty much closes the door on a July rate cut from the Federal Reserve. Non-farm payrolls advancing 272,000 last month, beating all projections in a Bloomberg survey of economists. Average hourly earnings climbing 0.4% from April and 4.1% from a year ago, both picking up from the prior report. Acting Labor Secretary Julie Su spoke to Bloomberg's Joe Matthew on Friday after the report came out.
The growth we're talking about is not just single industry, right? It has been for the entire time, but certainly this last month is no different. Very, very broad-based. We saw growth in leisure and hospitality. We saw it in construction. We saw it in professional services. We saw it in healthcare. And so, there's really, the numbers don't lie. It's really, a broad-based, solid, continued growth. And I think that coveted soft landing that so many people bet against.
The numbers don't lie, and the bond market reaction certainly doesn't lie. We've got a great roundtable on the economic data, what it means for the Fed, what it means for rates. Treasuries, as I mentioned, getting hammered following that data release. So let's get to the interview. Michael McKee is Bloomberg News International Economics and Policy Correspondent. He's here in our studio. And from our Bloomberg Intelligence headquarters in Princeton, New Jersey, Ira Jersey, Chief U.S. Interest Rate Strategist. Mike, I want to start with you because I heard you covering this live on Bloomberg Surveillance. I believe the phrase you used was, we got a little bit more than we expected in the most recent report. How did everyone get this wrong? Why such an upside surprise, especially given the softer data that we saw earlier this week?
Well, it's a combination of things. I think the softer data is part of it, especially the ISM numbers. It came in weak in the employment numbers, but we'd also seen some weakness in retail sales and spending. And the narrative developed that the economy was slowing. And it still may be, but that fed into forecasts. And we saw 175,000 last month in the initial print. People said it's not going to be a whole lot different from that because everything else is telling us it's about the same. And we were all wrong.
Can you help us understand this higher unemployment rate to 4%? How do you square that with then the hotter than expected jobs report, payroll number?
Well, you can because the labor force grew significantly, over 200,000. But the real question is, within that, the number of people who were reported unemployed, or rather employed, in the household survey fell by 480,000, and that confuses people because it's a difference between them and the establishment survey, and people really don't know why that is. The establishment surveys has a lot more participants than the household survey. The household survey does not include, or at least as far as we know, likely does not include all these immigrants coming into the country. If they're there illegally, they don't want to admit that they're working. And companies just report whoever's on the payroll. They don't report their nationality or background. And so there are a number of different possibilities for what's going on. At some point, the numbers will kind of reconcile, but right now we don't know. But the general view of economists is look at the establishment number, not the household number.
Okay, Ira Jersey, come on in here because the reaction in rates was certainly swift with yields up across the curve. How much of a reset is this for the bond market?
It's not a crazy reset because you're talking about going back to levels where we were about a week and a half ago. So it's basically returning to where we were before we got that soft ISM manufacturing number and some of the other weak data that we've received over the last week. I think for the long end of the yield curve, so you're talking about the 10-year bond, 30-year bond, I think yields are probably in a range here and probably will stay in a range until there's a very clear shift either upwards or downwards in economic momentum. A lot of the data you saw, even though this was an upside surprise today, a lot of the data that you see is kind of just chopping around. It's okay economic news, and I think for that just means that the back end of the curve will just kind of chop around. The front end of the curve, so you're talking about 2-year notes and shorter term instruments that have something to do with the Fed, those can move around quite a lot because we're going to be pricing in and pricing out Fed cuts here and there every time we get these numbers. And basically, if you look at what we're priced now for 2025, we priced out almost an entire cut today for the cycle because of the strong data. So I think that's the market doesn't necessarily want to be short, but at the same time, it's hard to be long when you start to get this very interesting data that seems to suggest we're not going to go into a recession anytime soon.
Yeah, Ira, I wanted to talk a little bit more about that and just the sheer amount of volatility that we're still seeing in the bond market. This seemed like this was supposed to be the year of the bond, the time that portfolio managers are kind of using treasuries as almost a safe haven bet. How much of that has been upended, and how much of that are we seeing in the market today and in the last few weeks?
Well, I think a little bit. We haven't seen the massive differentiated flows out of risk assets and into treasuries. If you did, you'd probably see treasury yields a little bit lower, right? People buying treasuries just as a safe haven, like you said, especially given frothy valuations and some risk assets, even corporate credit, for example, with credit spreads as tight as they are, the equity market, at or approaching their all-time highs again. I think the thing with the bond market that people always forget is you go out and buy a 10-year, and if you're looking at that in a 1-year return or a 6-month return horizon, it can be very volatile. But if you buy something that's easier to hold to maturity, like a 2-year note or 3-year note at this point, the risk reward is more like owning a money market and locking in yields for longer than you can if you say go out and buy a treasury money market that has an average weighted maturity of around 60 days. You go and buy a 2-year note and you lock in 4.85% for the next 2 years. So there, you might give up a little bit of return in the near term, but you also have some certainty. And not only that, if interest rates would have to go to 10% for you to start losing money if you buy a 2-year note today. So the risk reward, I think, kind of favors shorter term debt because that 10-year, it goes up 20 basis points. You're going to start to see your dollar price go down faster than the interest income that you get.
Hey, Mike, we heard Ira talk about rate cut expectations even into next year being changed after this report. But minutes after the data were released, Citi changed its first Fed rate cut from July to September. Later, we saw JP Morgan change its view from July to November. The big question, what does this mean for the Fed and for cuts, especially ahead of next week's meeting?
Well, they're not going to do anything at next week's meeting.
And they weren't, nobody thought they were going to do anything.
They weren't going to do anything. This leaves the question of what happens with the dot plot. How many dots do we get? We were 3 at the March meeting. Now, the question is it going to be 2 or is it going to be 1? And that's a very interesting open question that might be slightly influenced by the CPI report. But at this point, Jay Powell has, in the past, essentially stayed fairly dovish, talking about how inflation is going to come down and they're going to get there, and their base case is they can cut rates without putting a number on it. So maybe he influences too. But I think what we have all learned is that having a number doesn't mean it's going to happen. The Fed doesn't know what it's going to do. They'll put out 19 different forecasts, and then we'll pick a median and say that's what they're going to do. And it's kind of crazy, but, you know, traders got to trade, so.
What are you watching for CPI, Mike?
CPI, we're watching real estate, housing. That's the big issue, because if you take real estate out of it and you measure U.S. Inflation the same way they do in Europe, then we have roughly 2% inflation. We're sort of there. So the Fed needs to see real estate coming down. Is one big thing. One interesting note, just crossing the wire here, we have breaking news for you guys. I bring you breaking news. The BLS has just announced it's going to cut the size of the household survey, which we were just talking about may not be accurate, starting in 2025 because they don't have enough money to do the same size survey as they had. So this is not going to be a good thing.
So the results may be less representative, Mike, of what the economy looks like as a result?
Just raises the possibility that the survey will be off. They also, well, according to the BLS commissioner, she said today, there's a real risk of a decline in quality, especially as response rates have also declined substantially.
Okay, one to watch, certainly. Ira, before we let you go, give us your catalyst for the next move that we could see in the rates market.
Yeah, well, it's got to be CPI and or the Fed, right? That's the next obvious one. I think after that, it's going to be probably more like retail sales, because if you think about the long-term growth prospects of the U.S., it's a propensity for the consumer to continue to spend money, right? And that's one reason why today's payroll report was important, not only because it created a lot of jobs, but you saw the wage data was very good, and you mentioned that at the top of the segment. So I think the retail sales data is going to be interesting, and I think 10-year yields, you know, if that's really good, can wind up seeing 4.5 to 4.6% pretty quickly.
A big thank you to both of you for joining us. Michael McKee, Bloomberg News International Economics and Policy Correspondent. Also Ira Jersey, Chief U.S. Interest Rate Strategist. Ira joining us from Princeton. Michael McKee here in the Bloomberg studio. Now to the equity market reaction, which I would say is a little confusing. We did see stocks higher, and just moments ago they did turn negative. We have with us Christina Kino, Managing Editor for Bloomberg's Markets Live blog. She joins us here in the Bloomberg studio. So we did see equities higher until just moments ago, off the back of this jobs report. How has the narrative shifted just in the last few minutes?
Well, Tim, I think there is a lot of concern, the fact that there seems to be a lot of positive momentum in the stock market at the moment, also equally raising the concern from some people that perhaps it's getting a little bit too hot too quickly, right? And so we are bound to see some kind of pullbacks that we're seeing as of today, for instance, that kind of like intraday pullback and the stock market losing steam a little bit. But overwhelmingly, though, it does seem like the momentum is still very much positive. There's still a lot of optimism that we can see higher highs in the stock market, and we are about to enter that kind of peak optimism summer period, the best 2 trading weeks for the S&P 500 here, which is the first 2 weeks of July.
Yeah, like you said, today a little bit of volatility, but when you look at the week, the S&P 500 is still up about 1.3%, and that's coming after just week after week of green. How much is this a rally that's just going too fast, too soon, and how much of this can actually, stay for a while?
Well, it depends who you ask, Emily. But, if we're asking kind of the skeptics out there, they really are arguing. Just when you look at the level of valuations at the moment, and again, the pace at which we've seen these increases to more than 25 record highs for the S&P 500 just this year alone, it seems like it should be losing steam sometime soon. But at the same time, you see the likes of NVIDIA reaching $3 trillion in market cap. I mean, there is an increasing dependence and concentration on the mega tech companies really driving these gains. And some of the skeptics are saying that can't be going on for forever. But so far, it hasn't really shown any signs of losing steam. And that's what the stock market is really going off on.
Christine, back to the reaction to today's payrolls number. I was actually really surprised that we didn't see a bigger reaction to the downside for equities, given the timing of rate cuts is being pushed back more. Why do you think that is? Why do you think that it was such a muted reaction?
Yeah, really interesting question, Tim. I mean, we were asking about this earlier this week on the blog because, again, we were kind of looking at the possibility of 2 rate cuts this year from the Fed, right? Especially after we saw that soft ISM manufacturing data and then a little bit of softness from the JOLTS data as well. But I think now the narrative has shifted from bad economic news being good for the stock market to good economic news being good for the stock market.
Hold on.
It's all good, Tim.
It's all good.
It's all good.
Yeah.
Is it though? I mean, when you have these discount cash flow analyses and you put in what you think rates are going to be, and if that changes, then what you're going to get as a return on free cash flow certainly changes moving forward, and that should bring equity markets lower. That should bring the price of a stock lower.
Yeah, absolutely. I mean, just when you think about it in terms of the level of interest rates at the moment and the cost of borrowing, right, it can't be sustainable for companies to kind of see it being this high for much longer. And that is the expectation among some of the stock skeptics out there, that at some point, higher for longer rates will have to bite for a lot of companies. But at the same time, I think there is this narrative that's kind of pushing forward, at least for today, that people are hanging on to, where maybe if the Fed, if markets don't think that the Fed will need to cut more than once this year, maybe the U.S. economy is really just that strong and it can power stocks even further.
Oh, we only have about a minute left, but talk about NVIDIA, because that stock has just been on a tear. And I know you've been writing a lot about it, Christine.
Absolutely, Emily. Again, $3 trillion in terms of market cap. A lot of questions over how sustainable it can be, especially because NVIDIA is still very much dependent on the rest of the tech sector spending on AI, right? That really is kind of its bread and butter. And so the question for the next few quarters, especially when we see earnings in the second half of this year, can that spending really continue? And can the retail sector also get in on this boom before it's too late and recedes? I mean, we are seeing the stock split coming through in early June. That's happening right about now. And so, yeah, lots of questions for NVIDIA for sure in the second half of this year. But so far, momentum looks to be very positive.
Shares of NVIDIA down just about 1% right now. $2.944.6 trillion is the market cap. A big thank you to Christine Aquino, managing editor for Bloomberg Markets Live blog here in our Bloomberg studio. Up next, a view of payrolls from the supply and demand side with the SVP of one of the largest staffing firms in the world. That's right after this on Bloomberg Business Week.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Major change for the U.S. stock market since our last update. Green across the board. Last time we checked, we were higher. Right now, the Dow, the S&P, NASDAQ 100 index, Russell 2000, all in the red. Little change to be sure. S&P down a point right now, down less than 0.1%. Dow Industrials down 1 point. We've got NASDAQ down 44, drop there of 0.3%. Strong U.S. payrolls and wage growth are pushing back bets for Fed rate cuts. 10-year, 4.42%. The 2-year, 4.86%. Right now, we've got gold, spot gold down 3%, tumbling $70 the ounce to $23.04. And West Texas Intermediate crude flat on the day, $75.52 a barrel. GameStop shares roaring lower right now, down 40.1%. GameStop tumbled during the highly anticipated return of Keith Gill to YouTube. He's roaring kitty after the video game retailer unexpectedly released earnings and a plan to sell up to 75 million additional shares earlier in the day. Again, we do have GameStop down now by 40%. Among other meme names, AMC Entertainment down now by 15.5%. So again, recapping, Dow Industrials unchanged on the day right now. S&P lower, little change, down by 1 point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much, Charlie. Certainly do appreciate that. Well, we continue with our top story, the May payrolls report coming in way above estimates, beating all projections in that Bloomberg survey of economists, pushing back bets for Fed rate cuts as well. For a view from the demand side of labor and the supply side as well, we bring in Amy Glazer, Senior Vice President at the global staffing firm Adecco. It's one of the largest human resources providers in the world. Amy joining us from Jacksonville, Florida this afternoon. Amy, did this catch you by surprise the way it caught so many economists by surprise today?
Hi, Tim. Thanks for having me. And not really. It reflects and mirrors what we're seeing. Jobs are still available and candidates are still seeking. So the positive news, I think, is reflected the last time we spoke. You commented on my optimism, and I still remain glass half full.
And what exactly is driving your optimism and the strength in the labor market right now?
I think a couple different things. We still continue and will continue to see increases in healthcare. You know, we have the peak 65 phenomenon, 12,000 people retiring every day, the aging demographic. Healthcare is going to continue to be robust. This time of year, we're seeing seasonal hiring as it relates to hospitality, as travel's at all-time highs, and we're starting to see students enter the market. One of the interesting trends we're seeing regarding students right now is we're seeing normally they take the lifeguard or fast food jobs. This year, we're seeing them take an interest in some more skilled positions. So looking at technician roles and even manufacturing, and that's something we haven't seen in the past.
Why do you think that's happening? Is that because there's such a shortage of those folks who are in the trades right now? Such demand for those jobs?
I think a couple different things. There's huge demand. Pay is great in those areas, and stability is something that everyone's looking for today. So flexibility and stability are the two great winners.
Do you think that's a permanent shift that we're going to see?
The stability piece, I think, will be around for the rest of this year. Flexibility will continue to become more and more important. The gig workforce is going to outpace the full-time workforce by 2027. Wow. So the employers that are embracing flexibility are the ones getting it right today.
That's really interesting. I'm wondering, kind of in a different vein, when you look at class of 2024, college students, where are those people looking in the labor force for employment?
Tech sector's hot. They're still looking in the retail sector. You still see interest in hospitality. Those things that they know are going to be sustainable for the upcoming years. But healthcare is really where it's at right now. And we're seeing lower barriers to entry. So we talk about the class of 2024, but you've also got to think there are jobs in the healthcare industry that don't require a 4-year degree. So you can get a 2-year tech certification, for example, or a 1-year certification and still enter that industry that's going to be booming. And it's often an entry path into a greater career.
You know, Amy, one of your notes caught my eye. You said that many workers are staying with their employers longer. What explains that? That's kind of interesting.
We talked about the Great Resignation 2 years ago, and now we're talking about the Great Stay. It's really that quest for stability, and I think COVID forced employers to really think about their employees' well-being, and lots of employers have embraced that and given better benefits and made it more flexible and a greater opportunity for their workers. They're also upskilling and reskilling to ensure they can retain that talent and not have to start fresh.
Amy, where in your data are you not seeing strength? You mentioned strength in healthcare and other sectors as well, but where are you not seeing strength?
Almost all industries are up right now, so it's not necessarily in the industry, it's more in where we're seeing it from a geographic perspective. You kind of have to look geographically as well as by industry vertical. The hot ones we're all talking about. The others, warehouse, transportation, manufacturing, even technology, we're starting to see some slight trends upward. They're just not as gangbusters as healthcare and education.
I want to take a maybe 30,000-foot view here with you, Amy. We saw with the number this morning that economists were a little bit more pessimistic on the labor force, and it feels like the consensus feels that way as well. What would you tell those economists, traders who say that the labor market is not as strong as maybe the numbers appear?
Yeah, I think, we've talked about since COVID that the recovery post-COVID wasn't going to be linear, that it would be bumpy. There's some noise. I think there was definitely noise in the April jobs report. Weather has some impacts on it, but as somebody who's talking in front of clients and dealing with open orders all day, I can tell you the market is still resilient and strong.
So when we got that JOLTS data earlier this week that many extrapolated to say, okay, well, the labor market is weaker than expected, did you think to yourself, that's not at all what we're seeing? We disagree with that?
I wasn't expecting quite the surge we had this morning, but I knew we'd have a positive report today.
Do you think that this positivity will continue for the remainder of the year?
Absolutely, I do. There will probably be some noise towards the end of the year. It is an election year, so we'll, employers may be a little hesitant waiting on that outcome, but come January 1st, I think we'll still be in a strong, robust market.
What does that mean in terms of numbers, like 200,000 and above each month?
I'd say over the next couple months, yeah.
Wow.
I want to go back to the Gen Z class of 2024 intern season, because that's fun. What should employers be expecting with these, new workers, Gen Z? They're just entering the workforce. People say that generation is a little bit different. What have you learned in your work about what bosses can expect?
So we actually just started 6 new managers in training at Adecco in my Atlanta office, fresh out of college this week. And they are eager, they're hungry, they have brilliant ideas, they have a different perspective on things. So you're going to need to be able to embrace that sign of creativity and allow it to flow. And they really want a seat at the table and a voice in the room. So making sure you're prepping the other generations in your workforce on how to navigate through that will be important. And looking at their soft skills.
Why are we both laughing?
Well, it's just funny to think about preparing your employers to deal with a new generation. Like, what does that entail?
What does that entail, Amy? Like, what do other folks who've been working in the newsroom or in offices for a while need to understand about this generation?
Yeah, they want flexibility. They want their voice to be heard. They want to work on their time. And they're more about the output of their work versus the hours. So Gen X, baby boomers, we're used to a 9 to 5, and the harder we work and the more hours we put in really proves our value. And the Gen Z mentality is the product of their output of work is what's going to show their value. So if they can get this job done in 4 hours, they're happy with that.
They can go home or work from home, I'm guessing. And that's where I want to go with flexibility. When you say flexibility, do you mean to say that employers who do offer flexible working conditions, i.e. working from home a few days a week, they are at an advantage significantly over those who make people come into work 5 days a week?
What we've seen with this workforce is that hybrid is the best way to go. They make connections faster. They get that sense of community, but they still have the flexibility to go to the beach in the morning or whatever it is they want to do.
Go to the beach in the morning? What are we talking about?
Jacksonville, Florida. So that's a common theme.
Before you log on, Tim.
This is so foreign to me, the idea on a weekday of going to the beach in the morning and then getting some work done. But I don't know, Emily, if that's working for the new generation. It's working.
Well, if they don't start until 9 and you live near the beach and you can work out at 6 a.m., I could see a path perhaps in Jacksonville. Maybe let's switch to the older generation, because Amy, you also write that more Americans than ever will turn 65. How will that impact the workforce this year?
So it's impacting it quite significantly, especially in the skilled trades manufacturing, where a lot of legacy knowledge and skill and talent are choosing to retire. So we're seeing skills gaps, which we'll continue to see over the upcoming years. One of the big trends we're seeing, though, is the embracement of the return of the retiree. So right now, 1 in every 8 person that's retired is looking to return back into work. And this is giving some relief for companies that have really experienced that loss that COVID accelerated.
But there's the flip side of that is those retirees feel like they need to get back to work. That's troubling, no?
A couple different reasons. So some of them are motivated to get back for money, but oftentimes we see they're motivated to get back to providing that sense of purpose and community. My mom's a baby boomer, and she volunteers because she misses that sense of community. So some are for economical reasons, obviously with inflation being what it's been, but oftentimes it's just about community and giving back.
Amy, before we let you go, did you already go to the beach today on this Friday Jobs Day, or?
Not yet.
Okay, not yet, but
Tomorrow.
maybe on the agenda.
On the weekend.
On the weekend. That's, in the old-fashioned way.
That's
It was,
old-fashioned
doing that
That's
stuff
what a
on
Gen
the
Xer
weekends.
would do, yes.
Exactly. Amy Glazer, Senior Vice President at Adecco, joining us from Jacksonville, Florida, on this Jobs Friday. Mixed market right now. The S&P 500 pretty much flat, but in the green, as is the Dow Jones Industrial Average. The NASDAQ Composite, though, down by 0.2% right now. Well, coming up next on Bloomberg Business Week, we get the latest on GameStop mania, because that's one company that's seeing its shares actually move lower on the day today. And that highly anticipated live stream from Roaring Kitty did not help the situation at all. That's right after this. First up, though, a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 Newsroom. Hey, Amy.
Hi, Tim. About $225 million in U.S. military aid making its way to Ukraine now. That delayed funding, blamed on the political infighting of the Congress, allowed Russia to make some gains on the battlefield. Ukraine's President Volodymyr Zelensky put aside his frustrations and made it clear that just like 80 years ago, this war cannot be won without the U.S.
Like it was during World War II, how the United States helped to save human lives, to save Europe. And we count on your continuing support and staying with us.
President Biden offered an apology to Ukraine's president for the 6-month wait while the two were attending D-Day commemorations in France. The U.S. military's temporary pier of Gaza's coast has been repaired. It's now reattached to the beach. This after the pier broke apart and sustained damage from heavy seas. U.S. Central Command Vice Admiral Brad Cooper said they do expect to continue the delivery of humanitarian aid within the next couple of days. Their goal is £1 million every 2 days. And federal prosecutors have rested their case against Hunter Biden, the president's son, in the federal gun trial. The trial is now adjourned for the weekend. The testimony from defense witnesses, including Naomi Biden, the daughter of the defendant. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long at Bloomberg. Choppy session. We have got the Dow, the S&P. They are both higher. NASDAQ in the red. Right to the numbers here with the S&P 500 index down 2 points right now. Jobs Friday. Little change there. Has been swinging between gains and losses. The Dow up 34, higher by 0.1%. NASDAQ in the red now by 29 points, down by about 0.2%. 10-year 4.42% with a 2-year that's yielding 4.87%. Spot gold down $75 the ounce, 2,300 even right now on the precious metal. A drop right now of 3.2%. West Texas Intermediate crude down 0.2%, 75.41 for a barrel of WTI. GameStop shares tumbling further after the highly anticipated return of Keith Gill, Roaring Kitty, to YouTube, as well as the video game retailer unexpectedly releasing earnings and announcing plans to sell up to 75 million additional shares earlier in the day. GameStop now lower by 39.6%. Briefly after earnings, DocuSign shares, they are down now by 3.2%. The e-signature company forecasts billings for the second quarter that did fall short of the average analyst estimate. So again, recapping here, S&P little changed right now. Volatile session, S&P up 3, a gain there of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that, Charlie. Certainly do appreciate it. Shares of GameStop down close to 40% right now. They even fell during the highly anticipated return of Keith Gill to YouTube and after the company unexpectedly released earnings and a plan to sell up to 75 million additional shares earlier in the day. That's what sent shares lower to begin with. During the live stream, though, GameStop shares were halted 9 times. For more, we bring in Carmen Reinecke, Bloomberg News equities reporter. She joins us here in the studio. Carmen, you watched the live stream along with hundreds of thousands of other people, so we didn't have to. Thank you for doing that. Appreciate it. What did we miss?
Well, the first thing you missed was a very bizarre late appearance from Keith Gill. So the live stream was supposed to start at 12 p.m. We waited at least 25 minutes for anything to start. It was really anxiety-inducing. The comments on the live stream were going absolutely wild. People were like, where is he? What's going on? Finally, he did come to the screen. We saw a video with a lot of cats, very on brand for him. And then he showed up, with very long hair, Band-Aids, a sling, which we later learned, was not needed for his arm, and was sort of showing that, he's being shocked by the comments, shocked by the markets. And it was really interesting. It was just sort of a return to, Roaring Kitty entertainment.
We're back. 2021 is back, Emily.
Well, I feel like he was brought to fame because at one point he did have a fundamental case for why he was buying shares of GameStop. Did he say anything that included any real fundamental analysis on the company?
He very briefly did speak about the fundamentals and then really kind of just kept going back to he was watching the stock, he was watching to see if it was halted, he was watching the comments, which really just rolled through the entire time. It was like rapid fire.
It was hard to read them because they were moving so quickly.
Exactly. So there really just wasn't a lot of substance here. He even said at the top of the video stream that he really just had no plan. He brought out the magic 8-ball, and he ended it kind of early for him. It, only went on for 50 minutes.
Was there anything in here that you can sort of tell us that harkens back to the height of the meme stock craze of 2021? Does it feel like we're at a similar place? I mean, after all, we're talking about Roaring Kitty again, and shares are moving double digits because of positions that he's taking.
Yeah, so he did show his positions again. They seem to be unchanged from what we'd seen previously. So there's that transparency is sort of back. He sort of made some jokes about E-Trade, don't make me sell this off, or sort of things like that.
Because of the reporting earlier this week from the Wall Street Journal that said that they were looking into his accounts.
Exactly,
okay.
Exactly. And I think that one thing that does feel like 2021 is the sort of enthusiasm for his return. Obviously, what maybe is not, it was the shares, they're still falling. They're down about 40%. That's maybe not what people had anticipated with his return to social media and speaking about GameStop. So it's, a little bit different this time.
What does the share sale mean in practice? And is that what's driving the stock lower today.
It really could be. I mean, we don't have any indication from GameStop that they are actually currently selling. They just announced this plan to sell shares. On one hand, people have said that it's very smart, savvy of them to be taking advantage of, running up in the stock price and, having these sales. But on the other hand, it can be dilutive for investors. So not everybody likes it. If you are holding GameStop shares, it's not necessarily great for your position to have the overall pie be getting larger. So that is something that could be sending shares down today.
Essentially, it's the opposite of a buyback. And what happens is that the company then can use that money for other things. We also got numbers from GameStop earlier today, and no earnings call, which is pretty typical for the company. What did we learn about GameStop with the little information that they do provide in their quarterly updates?
Yep, no earnings call. That is very typical for them. They showed that slowing sales and a wider loss than expected. So not great, right? I mean, this isn't a company that people usually are actually looking at for its fundamentals, which is one of the reasons that it has become, so hyped on the meme scale. But yeah.
I want to kind of talk about the speculative fervor in the market because it's confusing. You see the stock down, but there were over 500,000 people watching the live stream, which is pretty incredible. We were joking with Mike McKee earlier that we think that might be more than the amount of people that watched Jay Powell's live stream during the FOMC. So what is your take, Carmen, on just the level of speculation and I guess animal spirits driving the market when you have, the stock down, but all of these people paying attention to what's going on?
Yeah, I mean, I think it really shows that the retail block is very important, that we're giving them a lot of weight, but it's because they can, and they've proven that they can move entire stocks, that they can squeeze things, that they, then they're not just moving GameStop. I mean, AMC is seeing similar sort of running up and down today alongside, the other meme names. So I think it just shows that people are kind of like, they're excited. They're excited, sort of looking for maybe a return of the meme mania of 2021. And I mean, we'll see where it goes from here.
It seemed like Keith Gill, aka Roaring Kitty, had perhaps consulted an attorney before doing this live stream because there was some legalese in there.
Yeah, so he did update sort of like the disclosure saying that this is really opinion-based, that people basically shouldn't be taking this as investment advice. And it was interesting because on the live stream, he did sort of make a few comments and looked like he was looking off the camera like someone else might be in the room with him. And someone did address a question, is there a lawyer there with you? And he said, there's not, maybe there should be. It's definitely something that people are watching, that, if there is market manipulation, if he's being more careful. He did also say a few times, like, oh, can I say this? Is it okay? So, yeah, I mean, it seems like even if there wasn't a lawyer in the room with him, he is attempting to be more cautious, or at least joking about being more cautious.
Have you ever talked to a portfolio manager who is bullish on meme stocks, or maybe not bullish and going long, but is actively trading them?
I haven't. I think the portfolio managers that I've all spoken to have said something along the lines of, we sort of have to watch it. You get questions about it. It's, not really my cup of tea. It's not something that I'm looking at. But, one person sort of likened it to like watching the Kardashians. It's the thing that's happening right now. It's interesting. It's fun. And people, they're following along.
In the Bloomberg terminal, we can look at ANR, analyst ratings. There are 0 buys on the stock. There is 1 hold, and there are 2 sells on the stock. So it's pretty thinly covered by analysts. But I think the difference is between this and watching the Kardashians is that people can lose and have lost serious money doing this stuff.
Yeah, totally. There is money on the line. And I mean, you have to remember that when you're going to play the market.
Yeah, that's a really good point. Hey, Carmen, thank you again for watching that live stream. And I'm kind of good news that it was under an hour because those things can tend to last quite a bit of time. Carmen Reinecke is Bloomberg News equities reporter. She's joining us here in the Bloomberg studio. A mixed day on Wall Street right now on this Jobs Friday. The Dow up a little more than 0.1%. The S&P 500 up 0.1% right now. The NASDAQ Composite down 0.1%. Coming up next, maybe you haven't made those summer plans completely at this point, but if you're going out to the Hamptons, we're going to tell you about the thing that you're supposed to do in the Hamptons this summer. It requires getting on a boat. That's just a little hint of what's next on Bloomberg Business Week.
Connection lost.
Company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 2:53 right now on Wall Street, and a federal judge has ruled that Alphabet will face a bench trial instead of a jury in the Justice Department's antitrust case alleging monopolization of the advertising technology market after the company paid the federal government $2.3 million. Right now, we've got Alphabet shares trading lower by just about 0.2%. Bain Capital has agreed to buy education software provider PowerSchool Holdings in a $5.6 billion deal. Private equity firm is going to pay $22.80 a share in cash for the Folsom, California-based PowerSchool. PowerSchool shares, they're up right now, little changed, up by just about 0.1%. Rent the Runway shares moving lower after the consumer goods rental company reported first quarter revenue that slightly missed expectations. Investors are focused on that, with Rent the Runway now down by 11%. PIMCO is laying the groundwork for a potential brawl over the future of media company iHeartMedia. Sources say the investment firm is in the process of creating a breakaway group and has hired New York law firm Davis, Polk & Wardwell. iHeart emerged from Chapter 11 5 years ago and is facing a potential restructuring. Shares, they're up right now by about 13%. Porsche shareholders are calling on the luxury car maker to ease off of its electric vehicle push as a global slowdown for the technology threatens sales and profits. Today, we've got ADRs of Porsche trading lower by 1.7%. Tesla, meanwhile, up by 0.6%. Tesla shares now at $176.95. And those are some of our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. I'm Tim Stenivek, and that's Emily Graffeo, Bloomberg News cross-asset reporter, in for Carol Masser on this Friday afternoon. Hey, let's go to Washington, D.C. now for a check of the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom. Hey, Amy.
Hi, Tim. Secretary of State Antony Blinken is going back to the Middle East. Blinken is working to keep a ceasefire proposal between Israel and Hamas alive. He's going to meet with senior officials and will continue to push forward a plan that the Biden administration says would pause fighting and guarantee the release of Israeli hostages and set in motion the rebuilding of Gaza and a longer-term solution to the conflict. Next week's trip will be his 8th visit to the region since the war started. The United States has reestablished that temporary aid relief pier to get deliveries into Gaza. The pier was damaged by storms and high seas about a week after deliveries first started. Central Command says they'll ramp up operations soon. The goal is to get 1 million pounds of food and other supplies moving through that pier into Gaza every 2 days. Former President Donald Trump and his former chief of staff, Mark Meadows, and Trump 2020 Election Day Operations Director Michael Roman have pleaded not guilty in Phoenix to 9 felony charges for their roles in an effort to overturn Trump's election loss in Arizona to Joe Biden. The two men, that would be Mark Meadows and Michael Roman, appeared by video conference for separate hearings. Now, the judge set an October 31st trial date. Meadows and Roman are accused of working with other Trump campaign members to submit names of fake electors to Congress. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and now back to Bloomberg Business Week with Tim Stenivek and Emily Graffeo.
Hey, thanks so much, Amy. Do appreciate that update. Well, as promised, we're going to tell you about the best thing to do in the Hamptons this summer, and it is, drumroll, tuna fishing, Emily. So how do you do it?
So this is not even a trip that has to take the whole weekend.
Yeah.
Now, with the dawn of blade helicopters, faster boats, larger tuna fish, Wall Street workers are flying out from New York on Friday and returning on Saturday with coolers full of tuna and sea bass. They go out to the Hamptons, they go on a chartered fishing trip, often out of Montauk, and then they eat the fish, and then they come back to the city.
And Starlink is actually a big part of this, because with Starlink internet service, you can actually do your work anywhere, at least according to the folks our own Kate Crater talked to for the story. You mentioned, Emily, going out on maybe 4 a.m. on a Saturday morning, catching some tuna and coming back in. Well, one person who recently did this brought a few of those tuna to a local sushi chef who prepared it several different ways, and he was able to then go eat that tuna prepared many different ways.
It's funny because fishing has been around since the dawn of the human population. We've always been fishing, but the Bloomberg article today talks about how it's actually becoming more popular on the East Coast as big game fish are swimming closer to shore. Tuna, for one example, the fishers out in the Hamptons are seeing more tuna, so it's making for a more exciting fishing trip.
Yeah, Kate spoke to Chris Squarey, the co-owner of Atlantic Yacht Haven Marina over in Freeport, New York, and said that the profile of people signing up for a fishing competition is evolving. He said that they've grown about 50% in the number of boats for the tournament over the last 5 years. Last year was 60 boats. This year, we're expecting 75 to 80. More Wall Street types, more hedge fund guys, along with Joe Fisherman.
Joe Fisherman. He's there too, guiding
there
you
as
along
well.
the way if you don't know what you're doing.
All right, so if you don't have your plans for the summer, you can go charter a boat in the Hamptons and do a day of tuna fishing. Hey, if you are sticking with us here on Bloomberg TV, coming up next, it is The Close. But if you're sticking with us on Bloomberg Radio for the next couple of hours, we got a great program, including Apple's biggest sales pitch in years. We're going to be joined by Mark Gurman, our chief technology correspondent, in just a few minutes for a preview of WWDC. It's Bloomberg Business Week, and this is Bloomberg.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is a Bloomberg Business Week. We're about 1 hour away from the closing bell on this Friday afternoon. We're seeing mixed markets. The Dow and the S&P 500 are fractionally higher on the day, while the NASDAQ composite is lower. We are live here in the Bloomberg Interactive Brokers studio. We're streaming on YouTube and Bloomberg Originals. I'm Tim Stenivek, along with my co-host for the afternoon, Bloomberg News cross-asset reporter Emily Griffeo, in for Carol Masser. How are you?
I'm good.
You good?
I'm feeling
Planning
good.
that fishing trip?
It's Friday. I have never gone fishing.
Ever?
Actually, maybe one time with my family.
Okay.
In Yellowstone, but
That's it.
That's it.
All right,
And
there's
you know, I
still
grew
plenty
up
of
on the Long Island Sound, but I've never gone fishing.
Well, there's still time. Hey, speaking of time, over the next 2 hours, we're going to talk payrolls because it is certainly the one heard around Wall Street. Shuts the door on a July rate cut. We're going to get the latest on the rates market. Also, Apple's biggest sales pitch in years. Mark Gurman is going to stop by with what to expect at WWDC when it kicks off on Monday. And then, Emily, we're joined by the CEO of a publicly traded ag tech company.
Working with gene editing crops. And speaking of food, we're going to do a check on the business of chocolate with co-founder of Lovo Chocolate, Tim.
Unfortunately, it's a remote interview, or else I'd think that she might bring some chocolate by, but
yeah, that would have
that's
been
not
nice.
happening. First up, though, before that, a check on the day's trade and top business stories. Let's head on over to Charlie Pellet. Hey, Charlie.
Hi, thank you very much, Tim and Emily. We have got the Dow, the S&P higher for now. Been that kind of a day. Choppy trading. Right now, the S&P up by 1 point. Little change there. Dow Industrials up 29 now, up 0.1%. NASDAQ lower by 10. NASDAQ down to just about 0.2%. 10-year yield 4.42%. 2-year 4.86%. Spot gold down 3.2% right now, $22.99, breaking below 2,300. Going to be very interesting to see how things shake out. West Texas Intermediate crude 75.39, a drop there of just about 0.2%. Keeping an eye on shares of GameStop. Roaring Kitty was back on YouTube today. The stock now plunging by 40.5%. Right now we got GameStop down at 27.64. Again, worth repeating, the drop there, just about 40.1%. Also keeping an eye on DocuSign after earnings. DocuSign shares down now by 3.4%. Recapping, S&P up 5, up 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Well, Treasury yields surged as surprise strength in the U.S. labor market forced traders to once again question whether the Fed can cut interest rates this year. Back with us in the Bloomberg Interactive Brokers studio is the man who earlier this week told us it was indeed the most important data point of the week, and I think I'd have to say I agree with that. Bloomberg News rates reporter Michael McKenzie. So you told us earlier this week this was the one to watch. Next week, of course, is the Fed and CPI. Huge for the macro economy. Of course, what happened today?
Well, it's really what happened over the last preceding week. The market got very long and wrong because the data came in a lot stronger and you saw everyone head for the exits. So that's why we've had a big rise in yields, and we were pricing in November for the first cut. We had September odds around 75%. We're now back to 50-50 for September. And November's now priced out. The only meeting where we have a fully priced quarter point cut for this year is December again. So we've just kind of
gone full circle?
Gone full circle.
Oh.
So the stock market is pretty much unchanged today, but in the bond market, we're seeing yields rising to double-digit levels, the 2-year up almost 15 basis points. So what are the rates traders seeing that the stock market traders don't seem to care about?
This is a bond market that's caught between two destinations. The first is we're only really going to get, this is mid-cycle. The Fed at best will maybe do 1-2 rate cuts over the next 12 months. The other destination, of course, is that at some point, this drip of sort of signs of cooling in various parts of the economy becomes something a bit more nefarious, and we get this sudden deceleration. It was interesting listening to Mohamed El-Arian this morning on Bloomberg Surveillance, because he said, the economy is slowing. There are headwinds there. And he said the risk for the Fed is if you stay on hold for too long, you run the risk of making a big policy mistake. And then he said that becomes very difficult to turn around. So I think There is still a case for rate cuts because the Fed will, like the Bank of Canada this week, it does want to get ahead of this. If it starts to see concerns that labour is really starting to fall apart, then it is going to do something. But the data today doesn't tell you the labour market is really going to fall apart, at least for probably the next couple of months.
So that's what was so surprising to me, because we have gotten JOLTS data this week that came in below estimates. We got other economic data that came in quite soft for folks to say, well, wait a second, we actually really are seeing things cool. Do you think this is an anomaly that we saw such a big number? After all, it did exceed every estimate out there by economists.
The problem is with the payroll report is it's been consistently beating estimates for some time now. And I don't know what, and look, they debate about the models, a household survey, all these different things, but ultimately the number is the number. And for the bond market, that got a little bit over its skis this week. This was the kind of number that forces you to go, actually, I've got to kind of get out of these positions. I'm too long and I'm wrong. Now, the other thing too, we heard this from Rick Reeder earlier today, he's adding to his 5-year, 7-year, and he's taking advantage of the backup. But I do think we're heading into a Fed meeting next week that it will be very important because they will upgrade their so-called dot plot. They'll tell you where they think they're going to be going. And again, that's something you can't really use. It's just like a framework of sorts. But the key will also be the inflation number. Right. That inflation number is expected to come in, I think, around 3.4, 3.5 on an annual basis for both headline and core. That's really not in the Fed's comfort zone for inflation here. So the bottom line here is the Fed can sit on the sidelines and wait.
But does that inflation story change given the strong payrolls report story that we saw today, given that we saw wages go up too?
Well, I think that's in the back of everyone's mind here.
That's pretty concerning, though.
It is concerning because, again, it suggests that there is reasons for why labour is holding in here. Is it because a lot of people over the age of 50 have taken early retirement? Is there a skill shortage? You do have the federal government here pumping a lot of money into the demand, into chip manufacturing, electric vehicles, etc. You need people who know what to do with those sort of cases, right? So there is a competitive labour market there. So I think that's going to be in the back of the mind of Fed policy officials when they talk next week. It's also in the back of the mind of the bond market too. I mean, that's why you've got today's big sudden shift back into what is essentially we're back into the middle of the range that's been prevailing for the last few weeks.
Yeah.
So we saw this week that markets outside of the U.S. have started their easing cycles. How much does the Fed take that into consideration? How much are they kind of communicating and looking at what other countries are doing with regards to monetary policy?
I mean, they're certainly going to be looking at it, and they certainly talk to other central banks all the time. The thing is, the US is a pretty closed economy. I mean, the only time the Fed takes notice of what other central banks are doing and what's happening in global markets is if it is effectively reflecting signs of contagion, because the US dollar is the reserve currency. And that's why the Fed, for example, has all these swap lines with other central banks. Normally what happens is if other markets, economies are running into trouble, it's because they need dollars. That's not happening. And so we do have this split. And we've had this has been shadowed for some time by the likes of PIMCO and other big bond managers who've been much more bullish on other bond markets globally versus the US.
You said the range kind of got back into what we've seen over the last few weeks when it comes to the bond market. Still, though, you talk to bond traders all the time.
Yep.
I'm wondering where they're seeing bonds go, especially where they're seeing the 10-year go in the near future. Does what we saw today change that view?
I spoke to a couple of people this morning, and their view was 10s are pretty much anchored around 450. Give it 10, 20 basis points either side. We're back above 440. We did get below 430 yesterday, I think, the 10s. 2s is sort of capped by 5%, unless you start thinking the economy is heating up and you're going to have to come back, the Fed's going to have to come back and raise rates. Very hard to see 2s go above 5. They have tested it. They tested it last week. We then got back down to, 470-ish and change in 2s this week. We're now back to 487. So that's where we're going to be batting around. And I think the thing is, if inflation comes in as expected next week, the Fed says, we're going to only do 2 cuts. We might look at still doing 3 cuts next year. Then it's going to be summer. So get ready for fishing trips and sitting on the beach. Until really, because the next Fed meeting after this will be end of July, and then you've got Jackson Hole to follow. So you're going to have this kind of waiting period.
Emily, by the way, I just looked at Mike's screen. He's not signed into the Bloomberg, so everything he just rattled off was exactly accurate because I'm looking at WB, World Bond Index here on the terminal, and everything was exactly right. So I guess you do stare at it all day, Mike.
I'm a bond geek.
Yeah.
To the multiple basis points.
Yeah.
Right. So that's funny. Now I'm thinking about fishing in Jackson Hole. And those Fed officials definitely like to fish in Jackson Hole. I watch ETF flows. Mm-hmm. There's been a lot of flows into intermediate treasury ETFs. Talk about your sources. Like, what part of the curve do they like right now at this juncture? Because I feel like this has been going on for a while.
It's interesting. It's 5 years. I mean, PIMCO, I think this week came out with their outlook for 3 to 5 years. We like the 5 year. Everyone likes the 5 year because that's going to encompass the next cycle. Mm-hmm. And you're currently at yields that are going to give you a pretty good income from fives. And if the Fed does end up cutting, you're going to be rolling down the curve over time. That's a good place to be. Twos is probably, again, if you get close to 5%, twos is where people like to buy. The back end is where I think people are less, there's a real concern under the surface about November and the elections. There's a concern about the deficits. Neither candidate and neither party really is thinking about, cutting spending, sort of raising taxes. None of this is being talked about. So if you look at what the CBOE is telling you, the Treasury market is going to keep on expanding. And actually, I was at an ISDA SIFMA conference on Wednesday with my colleague Liz McCormack. And yes, that's a conference about all the geeky guys and women in the bond market. And so they're worried about the cost of capital for banks as market makers. But the other issue they were really flagging was the deficits. And so we wrote a story about that because you're in an environment where if the deficits continue to rise, if spending goes unchecked, do you really want to own 10-year and longer in the Treasury market? That, I think, is something that's coming. So it just reinforces this attraction of being, I like the intermediate part of the curve. Yeah. I like that 5 year because it kind of...
What's the risk with 10-year, though? I mean, it's backed by the full faith and credit of the U.S. government.
That's true, but again, you keep hearing people talking about the Liz Truss moment. And I'm old enough to remember when a certain newly elected President Bill Clinton said, I'm going to do a big spending program at the end of '92. And the bond market said, no, you're not. And the bond market, this sort of famous bond vigilantes moment. And that's what colored the Clinton administration from there on in, which means by the end of Clinton's second term, we had budget surpluses. And we were talking about, is the bond market going to go away? I mean, that's just how things have swung so much in the last few decades. But the bond market will at some point say, no more. There'll be a Roberto Duran moment if you know your boxing.
Well, hopefully when and if that happens, you'll join us here on Bloomberg Business Week to give us all the details and explain it to us. Bloomberg News rates reporter Michael McKenzie here in the Bloomberg Interactive Brokers studio. So Michael told us that it was the most important event of the week. Next week, of course, the Fed, CPI. But for Apple, it's the company's biggest sales pitch in years. We're talking about WWDC, the Worldwide Developers Conference. And this year, it's all about AI, nearly 2 years after the Gen AI frenzy started. Apple finally preparing to lay out its vision for the tech. Bloomberg News Chief Technology Correspondent Mark Gurman joins us from LA with more. Mark, you start your piece on next week's WWDC by writing that Apple isn't the first to introduce new tech. They weren't the first to do an MP3 player, a smartphone, or a tablet, but many people argue that they did come out with the best products. Are they taking the same approach with AI?
Well, they're going to try to, right? In terms of if it's the best product or the best technology, they're going to fall far from that, right? Generative AI, it's been the heart of the conversation about artificial intelligence and the whole tech industry over the last several months. OpenAI is at the forefront. You have Anthropic. You have Meta is in there too. Microsoft has been there. Apple's utilities are going to be quite a bit different, at least this year, right? This is going to be a beta, an initial launch. This is going to be more about notifications, synthesizing information, providing proactive details. But there's also going to be an integration with OpenAI to fill the generative AI gap. So this is Apple just really getting started here. They've fallen so behind, it's going to be hard to catch up This year, it's going to take a couple more years.
Mark, give us a sense of what is at stake here. I'm a markets reporter. I'm looking at Apple. It's only up 2% year to date. You compare that to the chip names, NVIDIA up over 100% year to date. How much is this event really a show me moment for Apple to prove its bid into AI?
I think the markets are controlled by buzzwords and algorithms, and traders love AI and generative AI and open AI. And so I think if Apple says AI 50 to 75 times on Monday during their keynote, investors will be quite pleased whether or not the integrations they're going to show are particularly innovative or not, right? So I think from a market standpoint, the deed is, it's already done, so to speak. This is over. Apple's getting into AI. Investors are going to be happy. But me, I'm more of a technologist, and I can tell you that the technology they're going to be showing, it's not as impressive as what their peers are doing, and it's going to take them a couple of years to catch up or even surpass the competition. What they will be doing is they'll be coming in with a different tact, focused on deep integration with applications, focused on proactive intelligence, focused on things that people can use in their day-to-day lives, transcriptions and voice memos, email classification, so many different bells and whistles across the operating system, iOS 18, iPadOS 18, and macOS 15. They're going to make the daily usage and experience of an iPhone far better. Very different than the approach that OpenAI has taken. If you want to see something similar to what Apple's doing, watch the announcement from earlier this year when Samsung introduced its S24 line with a bunch of AI integration with Google Gemini. That's the Apple playbook, plus the OpenAI chatbot, all integrated together in a very privacy and security-focused manner.
Do you think, Mark, that people will use these features that Apple is planning to unveil?
Oh yeah, I think they'll be hugely popular. AI emojis is another one. That would be a cool one. You type something, it'll turn your phrase into a custom emoji just for you. There's also some other new non-AI features, right? Like, here's a hugely requested one people have been asking for a while. The ability to schedule an iMessage to be sent later.
Ooh.
That's going to be cool. The ability to customize your home screen and place your icons anywhere. Be able to themify your home screen and introduce different color patterns to your icons. New blood pressure management features inside of the Health app. There's a new passwords management app to compete with 1Password. There's an upgraded control center. There's a revamped settings interface. So a lot of different changes that are going to cause quite a stir and really excite people both on the AI side and on the non-AI front.
We have 20 seconds left, Mark. Which one do you think is going to make the biggest splash?
Biggest splash will be Apple Intelligence, the new set of AI features, but I think Gen Z will really like the new home screen. People are going to go wild over that, as well as the new AI emojis feature.
I'm excited about the AI emojis. Also excited about a password manager. My passwords just, they're such a mess with different apps, and sometimes Safari wants to take it over, or Chrome wants to take it over. So if that's a problem that Apple can solve, I'll probably end up giving them more money. Bloomberg News Chief Technology Correspondent Mark Gurman joining us from Los Angeles. Taking a look at the trade, just about 40 minutes from the close. We're pretty much flat across the board, except for the NASDAQ down 0.2%. This is Bloomberg Business Week.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ, all in the red right now. Let's throw in the NASDAQ 100 index and the Russell 2000 index as well. Russell 2000 right now down 1.1%. Dow Industrials down 32, decline there of just about 0.1%. S&P down 5, also down 0.1%. We've got NASDAQ down 55, drop there of 0.3%. Has been a volatile session, stocks swinging between gains and losses. 10-year 4.42%. The 2-year, 4.87%. Spot gold now down 3.4%. Major move there to the downside, down $80 the ounce, below 2,300. $22.95 for an ounce of gold. West Texas Intermediate crude down 0.4%. $75.25 for a barrel of WTI. Jobs Friday came in hotter than expected, and with reaction to the jobs report, here's Lindsay Piegza, chief economist at Stifel Nicholas.
I do caution against reading in too much to the headline payroll number, because we are starting to see somewhat a divergence between the payrolls and the household survey. Payrolls are consistently reaching new highs month after month, but the household survey really has shown somewhat of fatigue, plateauing over the past, I would say, 6 to 8 months.
Lindsay Piegza interviewed this morning on Bloomberg Surveillance. GameStop shares GME on the ticker down now by 39.1%. We've got the stock tumbling after the highly anticipated return of Roaring Kitty Keith Gill to YouTube, as well as the video game retailer unexpectedly releasing earnings and announcing plans to sell up to 75 million additional shares earlier in the day. Again, GME down now by 38.8%. AMC Entertainment, another meme stock moving lower by 15.1%.